Hello everyone, I am Ankush Chirimar and welcome to my YouTube channel. Today we are going to cover in 100% detailed and crisp way your new case scenarios booklet for CA final audit. Yes, you read that right, that ICI has just released your new case scenario booklet for May 26 and onward examination. It was just launched 1 to 2 days before, and here I am, the first one to solve 100% of the case scenarios with you in this particular video, in this particular case scenarios marathon. And in this particular case scenario marathon we are going to cover all the 60 case scenarios, so just be with me till last, because ICI has handpicked these case scenarios because these are the most important case scenarios, plus the trickiest ones case scenarios have been put by ICI in this case scenario booklet. So you should definitely watch this video till last so that you can at least solve all the case scenarios in the least effective time as possible, because this is going to be a detailed and crisp marathon in which we are going to cover all the options whenever required, whenever I think that the options can confuse students. So we will be discussing all the options, and directly if we can directly from the question itself, if we can identify the answer, we will identify the answer directly itself. And for any particular question, if we have to refer the case scenarios, then I would have already highlighted the case scenario for what particular question we need to refer the case scenario, or we can directly solve the question and answer. So I have already done all the markings, all the highlightings, and this highlighted PDF you can find from my Telegram channel, whose link you can find from the description. So yes, we are covering this from the ICI case scenarios booklet itself, so you get the feel of how the ICI case scenario booklet looks like and how we have to perform or how we have to solve this whole case scenarios, 60 case scenarios with me. Okay, yes sir. Secondly, I just want to say, if you want to do more revision, if you want to do more practice of case scenarios and MCQs, then I have already created a 5 hours long video that I have posted on around, maybe you can say few months before, and that has around 40,000 plus views. Obviously it is in Hindi, so if you are a Hindi student, then you can watch that particular video. It has all the MCQs, all the case scenarios that is put by ICI in RTPs and MTPs and ICI modules and old course RTPs and MTPs and past year papers, question papers. Everything is covered in just 5 hours, and that particular video link I will attach in description and pin comment as well, so you can directly watch it from there if you haven't watched it earlier. And if you have watched those videos earlier, like 5-hour video, and the earlier case scenario booklet had 30 case scenarios of May 25, which we had already covered in 3 hours. If you have watched that video, then also you have to watch this video, because in this particular video ICI has covered many new case scenarios, and obviously few case scenarios are also repeated, so that you have to watch both the case scenarios or all the case scenarios, so that you are able to do a comprehensive coverage of our CA final audit syllabus. And this will be more fruitful, more beneficial after you have done a good self study of CA final audit, so that you can now evaluate yourself whatever you have done. Or this will be a good one time more revision of many concepts of CA final audit, because you know sir, there are 60 case scenarios, and per case scenario on an average you can expect 4 MCQs. So these are approx 240 to 250 MCQs ICI have given in this case scenario booklet. So it is a good comprehensive coverage of your CA final audit syllabus, which we are going to do in the least effective time possible and going into the details as well. Okay, yes sir. And this highlighted PDF I already told you that you can find in the Telegram channel. Let's start from our first case scenario that we have already highlighted for you. So this is our first case scenario. Before starting with the first case scenario, let me quickly tell you about all our resources that we have for you for CA final audit, especially for English students. So here all the resources. First of all, to talk about batches, for Hindi we have the regular batch that is of 80 to 85 hours. For English batch we are going to soon launch the regular batch as well, but currently we have your exam oriented batch, which will be your approx 40 to 45 hours. In both the batches we will cover 100% concepts and 100% questions from part 1 of the question bank. Yes, you heard that right, 100% concepts and 100% questions in these duration. You can watch the demo lectures on the YouTube that are already uploaded. Second, to talk about books, sir, we have a concept book that is of just 160 pages. This is our concept book. This covers 100% of your relevant portion for CA final audit, and this concept book has already shown 110 plus marks coverage in each of the attempt that has happened in the new course. This concept book is fully enough for you when you are doing CA final audit syllabus, and it is also fully amended for your May 26 and onward attempt. Second, to talk about our question bank, we have two parts of the question bank. One is question bank part 1, which contains all your interpretational questions, all your analytical questions which you have to apply your mind, all your tricky questions. So you have to do this particular part 1 of the question bank, and part 2 of the question bank contains all the direct question, the questions which you can identify from the last line of the question itself. Those questions are covered in part 2. So if you don't have much time, you can just skip the part 2 of the question bank. This question bank, as you can see, this is fully color coded. We have highlighted the source in the green. We have highlighted the question also, not just answers. We have also obviously highlighted the keywords in the answers, but also the questions we have highlighted. This particular highlighting you will find in the printed as well, so that you can cover this question bank quickly in your 1.5 days. All the important points are covered and all the important points are highlighted in red, and this is a color coded question bank which you can obviously find on our website as well. And lastly, we have you know this, everything is fully amended for your May 26 and onward attempt, and we have your handwritten notes as well. Handwritten notes you can find on our Telegram channel, and Telegram channel link you can find on our description and pinned comment. And obviously we will be uploading 100% detailed revision videos for English. We have already uploaded the 100% detailed revision videos for Hindi. Next, to talk about our test series, we have all subject test series for CA final. Yes, you read that right. All subjects test series we have for May 26 attempt. Soon we are going to launch for September 26 attempt as well. In this, there are two types of test series. One is cumulative test series. You will do the most important 30% syllabus first, then you give the test. Then you will do 30% plus 40%, that is 70% syllabus. So you accumulate the syllabus and then you will give 100% syllabus. This is a cumulative test series for all the subjects. And we have also full syllabus test series. 4 test series we have, and there are many all India ranks from our test series in September 25 and January 26. You will definitely see the results, and just see the quality of with which we check your copies. You can see the sample evaluated copy that is uploaded on our website, and you will get the exact same checking that is there in the sample evaluated copy. Just see the quality. And lastly, we have your one-on-one mentorship program. If you want one friend, come guide, can mentor to support you till the exams, to guide you, to make planner for you, to strategize for you, to pressure you, to motivate you. Everything will be done by our mentor, one-on-one mentorship program. And we have already cleared 25 plus CA students in September 25 attempt, and next is going to be you. Everything, all the details you can find on our website. And lastly, after you are done with the exams and you want to focus on your resume, LinkedIn, interview, career, domains, then we have a career navigator program for you. Yes, we are Ankush Chirimar classes. We are there with you when you are a CA student and when you become a CA as well. Okay, yes sir. And lastly, when you will becoming a CA, we will be definitely celebrating together. I will be felicitating you in our felicitation fiesta, a physical event that will be happening in Mumbai. Okay, yes sir. So you are coming to Mumbai once you become a chartered accountant. And lastly, just before starting, I just want to tell you, I just want to request you, please do like the video to mark your attendance and comment down CA with your name, so that you make a manifestation that you are definitely going to clear in CA in your CA final exams. Okay, yes sir. Now let's start with case scenario 1. What does case scenario 1 say, sir? Let's do first MCQ. What it says, sir, it says that there is an unspent amount of 20 lakh, and out of the appropriate reporting responsibilities of Messrs. HG and company for compliance of Caro 2020. So if there is an unspent amount of CSR of 20 lakh, what do we do with the unspent amount, sir? If there is any unspent amount for other than the ongoing projects, then we transfer that unspent amount to schedule 7 of the fund. And in how many months we transfer that, sir? Within 6 months from the expiry of the financial year. This is your MCQ. In other MCQs, there is schedule 3, there is schedule 7, but the 6 months is converted to 3 months. So it is schedule 7 plus 6 months. Okay, yes sir. Next is what for question number 2, we need to study this. What it is says, sir? It says that this is not reflecting anywhere in the financial statement. So some matter is there which is not reflecting anywhere in the financial statement, and CAH is thinking that it is relevant for user understanding of the financial statement. So this particular question has a confusion. You are saying that it is relevant to users understanding and it is not disclosed in the financial statements, but it is relevant to users understanding of the financial statements. So then now sir, what we will give, whether we will give emphasis on matter paragraph or whether we will give other matter paragraph. Now here you need to see that it is, first of all, it is not disclosed in the financial statements, and second, the wording it is user relevant for users understanding. So whenever it is relevant for users understanding and not disclosed in the financial statements, we give other matter paragraph. So here what we will do, sir, how will CH report the matter under the non-compliances under the FEMA Act, sir? We will report it under the other matter paragraph. Okay, yes sir. Let's go to third question. What it says, sir, which of the following is not a current period consolidation adjustments? We will have to identify which is a permanent consolidation adjustment. Okay, so first of all, it says that there is adjustment for harmonizing the different accounting policies. Harmonization happens every year, so it is a current period. Second, adjustment to financial statements for recognized subsequent events. Subsequent events are identified every year, so it is a current period consolidation adjustment. Next, we are determining the unrealized intra-group profits on assets acquired or transferred to B or C Limited. It also happens every year, so it is a current period consolidation adjustment. But the correct option is that we are determining goodwill or capital reserve of B Limited and C Limited as per applicable accounting standard. This does not happen every year. Determination of goodwill does not happen every year. Therefore, this is a permanent consolidation adjustment adjustment. Okay, yes sir, so this will be your correct option. Next, when we are not keeping the money in the separate bank account, CAH will be held guilty of professional misconduct. Yes, he will be held guilty, but here in this particular case, CAH was receiving his advance for services that he has given. So here in this case, the council had made a suggestion that if you are receiving advance for the services that you are going to give, then you do not need to keep it under separate bank account. Then you will not be considered guilty under clause 10 part 1 second schedule. Okay, yes sir. So here CAH will not be held guilty. In the question it was given that he was basically receiving advance for services that is to be given by him. Okay, yes sir, this was your first case scenario. Let's jump to second case scenario. So in this way we are going to cover all the case scenarios. Whenever the options, reading the options would be important, I will be reading the option. Whenever referencing to the case study will be important, we will be referencing to the case study, and whenever we are directly able to solve the case study, we will be directly able to solve the case study. Okay, yes sir, if you like this approach, then do like the video. Okay, yes sir, that will definitely motivate me to put more videos for you guys in English language. Okay, yes sir, chaliye. First of all, first question, what does answer? It asks that we are need to calculate the amount of revenue leakage. Okay, we need to calculate the revenue leakage for this particular bank. So what has happened over here is there is some discrepancy. What is the discrepancy, sir? Here there was a sanctioned term loan of 5 crore whose interest rate was 9.5 crore. However, due to a technical problem in the system, that interest rate was put as 8.5 crore, 8.5%, and this was from the 1st of the April. Means for the whole year the interest rate is 8.5%, while it should have been 9.5%. So how much is the revenue leakage here? How much is the revenue loss here, sir? 5 crore into 1% is the revenue loss. That is the difference between the two. So 5 lakh is the revenue loss in first case. Second case is, sir, there is we have sanctioned the working capital limit of 3 crore and we need to charge a processing fee of 1 crore, but we have already only charged the processing fee of 0.5 crore, 0.5%, which means that we have not charged the processing fee of 0.5% on 3 crores. So 3 crores, 0.5%, that goes to 1.5 lakhs. Next is what, sir? We have sanctioned a cash credit limit of 4 crore and we have a condition on the cash credit limit that the stock statements should be submitted monthly, but the borrower has submitted the stock statement not submitted the stock statement for 3 months, and here the penal interest should have been charged at 2% per annum as per the sanctioned sum, but we haven't charged the penal interest. So how much will be the penal interest, sir? It will be 4 crores for 3 months at the rate of 2% per annum. So 4 crore, 2% for 3 months, and it will be 2 lakh. So this is the revenue loss in 3 particular cases, and if we combine this revenue loss, it will be 8.5 lakh. So here the answer will be what, sir? 8.5 lakh. Next is we need to select the correct option after calculating the aggregated risk adjusted rate of your assets. So we need to calculate the risk adjusted value of the assets. We need to multiply with the risk weights, and then we need to calculate the risk adjusted value of the assets. So here it says cash and bank balances including FDs and certificate of deposits with banks. Since it is with banks, then the rate will be 0%. So here the rate is 0%. Second, we have an investment in the bonds on public financial institution. Now here the kids got confused, students got confused. This question was asked in your exams, and here the students got confused that the bonds of public financial institutions are written, but we have already studied that, sir, 20% rate is applicable for bonds of public sector banks, not public financial institution. So since these are public financial institution, therefore 100% will be applicable on them. Okay, yes sir, every keyword is important, I already told you. Next is current assets that we have given loan to the star given is already 0% because these are our staff only. Okay, yes sir. Next is fixed asset net of depreciation, that is furniture and fixture. Rest of all the assets that you have not covered, that have not been covered under the risk assets and that table that we have already studied about the risk weight, anything that is not covered in that will attract a rate of 100%. So here directly we will take 100%. And next is any domestic sovereign state government guaranteed claims which are in default for 75 days. So if there is any state government guaranteed advances which are in default for which are not in default or default for less than 90 days, then it is 20%, and if their default is more than 90%, then it is 100%. No, more than 90 days, then it is 100%. Okay, yes sir. So here will be 100% of 50, that is 50 crore, 100% of 30, that is 30 crore, and 20% of 60, that is 12 crores, with totals to 92 crore. So here the answer will be what, sir? 92 crores. Next is how will Messrs SQ and Associate report under Caro 2020 with reference to revaluation of assets. So there was a revaluation of assets. Let's see where is the revaluation. So here what has happened, sir? There was a revaluation of building and there was a 6% increase in gross carrying value. But do we see gross carrying value in Caro 2020? No sir, we do not see gross carrying value. We see net carrying value. What is the increase in the net carrying value? The increase in net carrying value is 12%. So yes, building will be reported reported in Caro 2020 because the change is 10% or more. Second is what, sir? There is a software asset and there was a 10% reduction in gross carrying value. Do we see gross carrying value? No, sir. We see the net carrying value and there was a 16% change in net carrying value and that was 10% or more. So therefore, building and your software assets both will be reported under Caro 2020. Okay, yes, sir. So here it says that both the revaluation of building as well as the software assets will be reported because the valuation, and we need to also mention that the valuation is done by registered valuer and we need to specify the amount of change. What was the amount of change? Okay, yes, sir. Now it says that what type of opinion or reporting that does Messrs. SQC and Associates will issue in the auditor's report in MRP Limited, considering two observations. So there are two observations and we need to consider what kind of opinion or matter we will need to report. So first of all, it says in observation 1, it is a high risk area. However, based on the other audit procedures, we have concluded that trade payable balances have been appropriately recorded, which means that we need to issue unmodified opinion, but it is a high audit area, high risk area, and high risk area, we know that we have already discussed 3 points about determining the CAM. In the first point was higher assessed risk of material misstatement as determined by the auditor, and here it is higher risk area, therefore it will be disclosed under CAM, key audit matter. Okay, yes, sir. Look at here, this will be disclosed in CAM. And the second one is what, sir? There is an observation too, that we know that there is an inventory of 1.8 crore which is missing due to during the physical verification of inventory. We are not able to count an inventory of 1.8 crore, and this was a significant portion of the value of inventory. The documentation that was presented to us was insufficient and we are not able to independently verify this inventory. Since it is material to the financial statements, therefore we will issue what? Qualified. How do we know that it is material, sir? Because here it is written that it is significant portion to the value of inventory. So here we will issue qualified opinion since we are not able to obtain sufficient and appropriate audit evidence regarding this 1.8 crore inventory. Okay, yes, sir. For observation 1, we are going to issue key audit matter, and for observation 2, we are going to qualify our opinion. Okay, yes, sir. Let's do case scenario 3. What does case scenario 3 say, sir? It says there is a case scenario 3 and we need to perform this as well. So here it is saying we need to identify what are the activities that comes under control activities, information processing. What activities come under control activities, information processing? This we have discussed in your risk assessment and internal control. What are the activities, sir? These are two types of control, application control and general IT controls. These are covered under your information processing. Okay, let's see over here. First of all, there is an actual performance versus which was reviewed against the budgeted one. This is called performance review, so this doesn't cover under information processing. Second is your edit check of input data numerical sequence check. This is your application control, so this is covered. Third is your authorization for access to computer programs and file work. So whenever access is returned, you need to say that it is a physical control. And lastly, these are the controls for implementation of new releases of package software application, and these are covered under your general IT controls. So 2 and 4 are covered under your information processing. Okay, yes, sir. Next is what, sir? Which of the following are not the specific procedures to evaluate the relevance and reasonableness of Mr. C's finding and consistency with other audit evidence? So basically we are using audit as expert and we want to evaluate the relevance and reasonableness of the auditor's expert's finding and consistency. Now what are the factors which are not covered while evaluating this? We need to understand that. So first of all, we have performed what, sir? We have performed your corroborative procedures for observing the C's work. We have to, obviously, sir, we have to perform the observation is included, performing corroborative procedures is included. Second is what, sir? Performing detailed analytical procedure to see whether the principles of materiality aspects are considered. We need to perform the analytical procedures as well. So these both are covered under the procedures. Third is what, sir? Reviewing the data for completeness as internal inconsistency. That doesn't come under the relevance and reasonableness of finding. It doesn't come under the finding aspect. And last is what, sir? It is verifying the origin of data. It also doesn't come under the finding. Okay, yes, sir. So 3 and 4 does not come under this particular types of procedure. Okay, yes, sir. Next is what is the effect of early adoption of Ind AS? How will it be reported in our auditor's report? We have already discussed in SS 706 the examples of the circumstances when EOM will be necessary, and in that particular example, one example is early adoption of Ind AS. That will be already disclosed in the financial statements, and it is fundamental to users' understanding of the financial statements. Therefore, it will be disclosed under emphasis of matter paragraph. Okay, yes, sir. Next is what, sir? Which audit firm is responsible for any lapses in the audit procedures that have been performed on testing of control activities relating to information processing as per SA 299? So there was certain lapses in test of controls in SA 299 in particular joint audit of the financial statements, and in this particular case the audit procedures are not performed professionally by subordinate staff of ABC and Associates. So what has happened, let me tell you. So here what has happened is that MPR and company was responsible for performing TOC over information processing. Okay, but MPR and company had a shortfall of manpower, shortfall of resources. So MPR and company took the help of subordinate staff of another joint auditor. So he told over joint auditor, please give your subordinate staff, your staff basically, so that I can perform my own procedures, which I am responsible for. So here the procedures that will perform by the subordinate staff of ABC and associates were wrong, but the responsibility, the ultimate responsibility for performing these procedures was of MPR and company. So here tell me, as per SA 299, who will be responsible for performing for the non-performance of the further procedures? Here MPR and company will be responsible for wrong performance of procedures, because MPR and company was individually responsible for the performance of TOC over information processing. Even if they have used the subordinate staff of the other joint auditors, this other joint auditor won't be responsible, only MPR and company will be responsible. Okay, yes sir. So here who will be responsible, sir? Only MPR and company. Okay, yes sir. Let's do case scenario number 4. What does it say, sir? It says, question number 3 and 4 we have to refer over. Okay, yeah. So it says, which of the following options is correct regarding classification and treatment of identified misstatements? So this is under your SA 450. Now there are 3 types of misstatement we have discussed. One is the factual misstatement, second was judgmental misstatement, and third was projected misstatement. So here it says that there is a error in depreciation schedule, and this error of depreciation schedule of 1 lakh is a factual misstatement, because there was a factual error in depreciation schedule. Secondly, what happens is there is an inventory valuation overstatement of 5 lakh. So as per auditor, the inventory is overvalued by 5 lakh rupees, while management says no, it is not overvalued. So this is a judgmental misstatement. So this is a judgmental misstatement. And third, there is a projection of misstatement involved over here. The auditor's best estimate of the misstatement of 6 lakh to entire population is a projected misstatement that we have already discussed in SA 530. So this is your correct option. Okay, yes sir. Next is what, sir? Which of the following actions is not required as part of auditor's documentation of identified misstatement? So basically we need to refer to the documentation requirements of SA 450. Now what is not required as per documentation? First is, sir, we need to record the threshold of 75,000 at the amount below which the misstatements would be considered clearly trivial. Yes, we have to document it as per SA 450. Next is, we need to list all the identified misstatement, whether the misstatement is corrected or incorrected. Yes, bilkul, we need to include this in our documentation. And third is, what is our auditor conclusion, whether the uncorrected misstatements are material or not? Yes, we include this conclusion as well in our documentation. Then what does we not include, sir? First of all, the justification for not communicating identified misstatement to TCWG. If we have not communicated any identified misstatement to TCWG, then we do not have to justify in our audit documentation. So this is not included in audit documentation. Okay, yes sir. Now it says that based on listed additional procedures, which of the following are inappropriate? Remember, here you have to see whether the ICI is asking appropriate, inappropriate, or not. What is exactly ICI asking? Because this is the biggest mistake that students make while solving these types of questions. So here the ICI is asking what are the inappropriate actions that the auditor is going to take in case of going concern. So going concern, there are additional procedures that are mentioned over here, and we need to check whether it is correct or not. So first of all, it says that as long as management provides a representation letter that says that they are addressing the going concern issues, the financial difficulties, the auditor is not bound by the terms of breached loan agreements. The auditor should not care about the breached loan agreements. This is very wrong, because we cannot just rely on written representation. So this particular additional procedures is not correct. Second is what, sir? We need to confirm the existence, legality, and the enforceability of the arrangements to provide or maintain financial support both from related or third parties. So basically, related or third parties have told the auditor that they will be providing the financial support to this particular entity. So we need to check the existence, legality, and enforceability of both of them, and we need to assess the financial ability of such parties, that whether they will be able to provide the support as immaterial. They're saying that we do not need to assess the financial ability of the party. This is very immaterial. No, beta, this is material. You need to assess. So I am saying that I will be able to support the entity for 1,000 crore. The auditor should check now whether I have the ability to pay 1,000 crore. I don't have 1,000 rupees in my pocket, and I'm saying I will provide the financial support for 1,000 crore. So it should not happen. Therefore, it is material to check the assessment of the financial ability of the parties also. Okay, yes sir, this procedure is also wrong. Third is, we need to evaluate the assumptions that are underlying the cash profit cash flow, profit, or other relevant forecast considering the historical accuracy and current market condition. Obviously, sir, we need to evaluate the assumptions underlying the cash flow forecast. We have already discussed in SF 570. So this is the perfect procedure. Next is what, sir? We need to consider whether there are any existing facts or information that have become available since the management has done his going concern assessment. It is not the existing facts, it is additional facts. We need to consider whether there are any additional facts after the management has made the assessment of going concern. Okay, yes, sir. So this is also wrong. One word changes ICI has done in all the procedures, and ICI is asking you to identify that. So you need to learn, or you need to basically remember, or you need to have that much conceptual clarity to understand what has ICI changed in this particular option. Okay, yes, sir. Next is what, sir? We need to review the minutes of meetings of shareholder, TCWG, and relevant committees, plans for mitigating actions or discussion on securing additional funding. Obviously, we can review that so that we know whether they have any plans for mitigating the going concern assessment or not. Okay, yes, sir, this is correct. And lastly, if management has not yet performed the assessment, the entity will be treated as not a going concern, and we should issue modified audit opinion. No, sir, this is not done. If management has not yet performed the going concern assessment, we need to ask the management to perform the going concern assessment. So this is also wrong. So 1, 2, 4, and 6. 4 procedures are wrong over here. See over here. 4 procedures are wrong. 1, 2, 4, 6. Perfect. Next is what, sir? Which of the following statement is most appropriate and consists of roles of QRB and NAFRA? So here what it is saying, sir, here there is a crypto limited that is a non-listed public company, and it is not covered under rule 3 of NAFRA and not referred to QRB by NAFRA, which means that this particular company does not come under NAFRA rule. So can the QRB review the quality of the service of the members in this particular company? Yes, here QRB can review the quality, it is allowed. But there is another company, that is Glitch Limited, that is a listed company, and in NAFRA has already initiated an investigation against this particular company because it is covered under NAFRA rule. So for Glitch Limited, can QRB initiate any investigation, sir? No, QRB cannot initiate any investigation if this particular company is covered under NAFRA rules. Okay, yes, sir, this is the thing that we have to write. So here what it is saying, sir, it is saying that QRB can review the quality of audit services of Crypto Limited, but it cannot review the quality of audit services of Glitch Limited because it is covered under NAFRA rules. Okay, yes, sir, this was your case scenario 4. Now we have to discuss case scenario 5. What does case scenario 5 say? So the first question is basically you need to describe the sequence of steps of your performance audit. Like what are the sequence of steps in which we do performance audit? So first step is what, sir? Understanding the entity and program. Second step is defining the objective and scope of audit. Third step is determining the audit criteria. Fourth, then we decide the audit approach. Then we decide what audit questions we need to ask. Then we assess our audit team skills and whether we need to obtain outside expertise. Then we prepare the audit design metrics. Then we establish the timetable and resources for our audit. And lastly, we intimate the audit program to the audit entities. Okay, yes, sir, these are the sequence of steps in our performance audit, and this was your first question. Okay, yes, sir. Okay, next question, what does it ask, sir? It is asking next question, as regards there is a method that is suggested for conducting performance audit of wind power limited. So there are different methods that are being suggested for conducting the audit of performance audit of wind power limited. Okay, yes, sir. Now we need to identify which of the team member may not be possible for the auditor to work with complete data because it is of high volume, and in such cases sampling technique are required to be used. So there are different 4 team members given over here, and we need to identify where we need to mandatorily perform sampling technique because we will not be able to evaluate the entire data. So here let's see what are the cases over here. So first of all, there is a Mr. P that has suggested a method that involves a descriptive analysis of entity, scheme of program. Descriptive analysis is basically what? A written analysis, a paragraph wise analysis of entities program. So here we will not be able to do any sampling technique. Okay, yes, sir. Second is what? There is a Mr. R that has suggested a method that involves collecting information from members of a population so that we can assess the interrelation of events and condition. So we can check whether the events and conditions are interrelated, so we can obtain information from a members in a particular type of population. So here we can obviously test the entire data that is there in the population. This is particularly fine over here because here it is not given whether the population is very big or whether the population is very small. So we can assume that the population is small so that we can test entire data. Here Mr. S has suggested a method which involves the review of the systems for planning, conducting, checking and monitoring the activity. We are just reviewing the system. So we can review the entire system. That is not of a worry. That is, we are not mandatorily required to do sampling over here. But here Mr. Q has suggested that in a method in which we are examining the available data relating relating to the financial statements, and the financial statements available data. What we are examining? We are examining the earnings, the revenue, the data relating to the program implementation, that the details of beneficiaries. Now we know that earnings and revenue have a huge amount of data. There is a huge amount of transactions that is there in earnings and revenue, and we will not be able to test the entire data. So here we will have to apply the sampling techniques. Okay, yes sir. So here in Mr. Q case, we'll need to apply the sampling technique. So here Mr. Q will be the answer. Okay, yes sir. Next is what, sir? There are following procedures that are undertaken by the audit team for audit of advances of Indore main branch. Okay, yes sir, perfect. We have to identify what audit procedure Mr. Y should focus upon. Now Mr. Y is doing what, sir? Mr. Y is checking the substantive procedures over advances. So Mr. Y is doing the substantive procedures. These are the procedures that we have totally done over the audit of advances. We need to identify which are those procedures that are substantive procedures. Okay, yes sir. So here first of all it says that we are examining the existence, enforceability and valuation of securities in respect of securities requiring registration. This is not covered under substantive procedure. This is covered under evaluation of internal control. We are evaluating an internal control over here. Okay, yes sir. Second is we are verifying the correctness of master data. The master data, that is the permanent data of the loan accounts that is updated in the CBS. We are checking the parameters like installments, EMI, rate of interest, tenure of loan. This is your substantive procedure. So this is your second is your substantive procedure that Mr. Y should focus upon. Second is we are examining whether the system that is laid down in the bank for review of renewal of expansion is being followed. So we are examining whether the internal control that is there for review or renewals is being followed or not. So it is evaluation of internal control, not substantive procedures. Next is we are examining the accounts that we have identified to be problem accounts but which have not yet slipped into NPA category, means which are not classified as NPA yet, and we are doing this by obtaining list of SMA1 and SMA2. SMA1 is basically 31 to 60 days, SMA2 is 61 to 90 days. Okay, yes sir. And we are considering the selection of problematic account. This is a part of your substantive procedure. Next, we are reviewing the auditor's report in case of borrowers having credit facilities from banking system which is beyond the cutoff limit fixed by the board of directors of bank. So we are checking your internal control, that is the fixed limit of board of directors of the bank. So here we are evaluating the internal control. So two procedures are substantive procedures 2 and 4, and these two procedures should be focused upon by Mr. Y. Okay, yes sir. Next we have to calculate the drawing power of this particular bank. How do we calculate the drawing power? Look at over here. So first of all, let's look at the first side, that is total stock. So total stock is 900 lakhs. Okay, particularly here in the total stock there is a damage stock of 60 lakhs that is included. Since it is included, we have to exclude it. So we have excluded the 60 lakh, that comes to 840 lakhs. Now here it says trade receivable. We will first of all ignore this here. Then there is a creditors for stock, means for this particular stock we haven't paid anything yet, 140 lakh. Okay, and this is related to the stock only. So we have deducted the 140 lakhs from 840 lakh, that goes to 700 lakhs. 700 lakhs is basically our eligible stock. Now here they have given the margin on stock. What is the margin on stock? 25%. So we will have to deduct 25% for 700 lakh, that comes for around 525 lakh. Okay, yes sir. This was your first part of drawing power. Second is your trade receivables. So here we have to trade receivables of 800 lakhs. So here we have taken 800 lakhs. Now we have to deduct those trade receivables which are overdue, and here they have given the overdue trade receivables for more than 90 days, that is 100 lakhs. So we have deducted 100 lakhs, so it's again 700 lakhs, and we have to deduct the margin on receivables is 40%. So we will deduct 40%, which comes to 420, and if we add both, then it is called 945, and this is your total eligible drawing power. Sanction credit limit is 1000. Lower of both is your drawing power, so lower of both is 945. So 945 is our drawing power, eligible drawing power. Okay, oh, yes sir. So here we have written 945. Okay, yes sir. This was your case scenario number 5. Let's do case scenario number 6. What does case scenario number 6 say, sir? It says that we need to consider the factors that influence the audit procedures for opening balances. Which of the following is the most appropriate course of action under SA? So basically, what is the most appropriate course of action in case of opening balances? Let's see. We have to study. Yeah, we have to study the case scenario over here. So what has happened, sir? There were the previous prior year financial statements of the company were audited by a different firm, but the predecessor auditor's report was modified because they have not disclosed certain liabilities, and the opening balances include significant provisions and carry forward adjustments. So basically there was a prior year financial statements, there was a modification due to non-disclosure of certain liabilities. Now tell me what will be the most appropriate course of action for the auditor. First it's what, sir? First it says that we need to perform the audit procedures in the prior period so that we can obtain the audit evidence that is relevant to opening balances, or we need to evaluate whether the prior period closing balances have been correctly brought forward. Now you can think, okay sir, this is also correct. No, this is also correct. we have to do this as per SA 510. We need to do this, but beta, it is asked what is the most appropriate course of action, and this does not refer to your prior period modification. We need to find that course of action that refers to your prior period modification. So here it is most appropriate. These most appropriate MCQs are the trickiest ones, because there can be more than one answer that you might think of, but you need to think which is the most appropriate answer in this particular context of this particular case study. Okay, yes sir. So this can also be an answer. Second is what we need to assume that the opening balances are material since the predecessor auditor issued a modified opinion. No, we cannot assume that. Next is we need to accept the accounting policies that is applied in the opening balances based solely on management's assertion. No, we cannot base solely on management's assertion, because that is not a sufficient and appropriate audit evidence in itself. So what we need to do, sir, we need to evaluate the effect of matter that give rise to modification in the predecessor auditor report with respect to the current year financial statements, and if we think that it is affecting the current year financial statement, then we need to modify our opinion as well. Okay, yes sir. So this is your most appropriate course of action. Remember that in most appropriate you need to check all the options. Okay, yes sir. Next it is saying that based on SA 530, which of the following is the most appropriate response while handling these situations while performing sampling tests and procedures. So let's see what options they have tried to given us. First they are saying that if the audit procedure is not applicable to the selected item, then the auditor shall perform only the alternative procedure but not on a replacement item. No, I already told you in SA 530 that we can perform the procedure on a replacement item as well. Second, in case where the auditor considers a misstatement or deviation discovered in a sample to be an anomaly, the auditor shall obtain a high degree of certainty that such misstatement or deviation is representative of the population. No, sir. If it is an anomaly, then it is not representative of the population. Okay, so this is also wrong. Next, we can solely rely on the results of sample and assume that any deviations identified are immaterial to the population. No, sir. We cannot solely rely on samples. We need to evaluate the deviations and misstatements as well. Okay, yes, sir. Last point is, if we are unable to apply the design procedures or suitable alternative procedure to a selected item, then we shall consider the item as a misstatement in case of test of details. This is perfect. And if in case of test of controls, we need to consider them as deviations. Okay, yes sir. Let's do question number 3. What it is saying, sir? It is saying which of the following is the most appropriate for this particular firm to respond to events that occur when performing external confirmation procedures, so that we can obtain relevant and reliable audit evidence. Let's see from the questions what they are trying to say. But here we got to know that there is something about external confirmation procedures, and we have to select the most appropriate option. Okay, yes sir. First option is that the failure that we are not receiving a response to the negative confirmation request. It explicitly indicate that the intended party has received the confirmation request or intended party has verified the accuracy of the information contained in the request. This is wrong. This failure to receive a negative response to the negative confirmation request does not explicitly indicate, does not word should be given over here. It is not given, so this is very wrong. Second is confirming parties also may be more likely to respond, indicating their disagreement with the confirmation request when the information in the request is in their favor. No, they are more likely to respond when the information is not in their favor. So not is missing over here, so this is also wrong. Next is what, sir? The auditor shall use negative confirmation request as a sole substantive procedure when he is aware of circumstances or condition that would cause the recipients to disregard such request. No, sir. If we have to use as a sole substantive procedure, then we should not be aware of any circumstances. Not is missing over here. So here you see in all the 3 options, not word is missing. And lastly, the correct option is non-response for negative confirmation does not mean that there is some misstatement. As in the negative confirmation request, we have already told the confirming party to respond only when it disagrees with the information provided with the request. So if there is a non-response of negative confirmation request, we cannot say that there is a misstatement only. Okay, yes sir. There can be a misstatement, there cannot be a misstatement. Okay, yes sir. What does question number 4 say? It says that there is this particular CA firm which are concerned with SA 620, which deals with auditor responsibilities regarding the use of external auditors expert when that work is used to assist the auditor in evaluating the cyber security framework. So basically SA 620 deals with the auditors using the work of auditor expert. Now, which of the following is incorrect option in relation to agreement with the auditor's expert? So while preparing agreement with the auditor's expert, which is the incorrect option? So first option is we need to ensure that the nature, scope and objective of the expert work are agreed upon in writing and including the timeline of delivery. Obviously we will need to ensure that in our agreement. Second is we need to identify the specific partner or staff who will liaise with the auditor expert and the procedures for communication between the expert and the entity, assist timely and effective communication, particularly in larger engagement. Obviously we will need to assist each other for the timely communication, particularly for larger engagement. This is also correct. Next is it is necessary for confidentiality provisions of relevant ethical requirements that apply to auditor also to apply to the auditor's expert. Obviously confidentiality, for maintaining confidentiality confidentiality, we make an agreement with the auditor expert. But what is not correct, sir? When the work of the auditor expert relate to the auditor's conclusion regarding a significant risk, if the work of the auditor's expert is regarding a significant risk, then we need to obtain both report. We already discussed this, that we need to obtain the formal written report at the conclusion of the expert work, and we need to obtain oral reports as during the audit progress. And here it says that we need to obtain just formal written report. This is completely false. Okay, yes sir, so this is your correct option. Okay, yes sir, chaliye, this was your case scenario number 6. Let's discuss case scenario number 7. Question number 1 as discussed over here. What does it say? That sir, there's a Messrs. Cap and Company that were assigned to verify the PPE register. Okay, there's a Mr. K, the engagement partner of Mrs. Cap. They carry out a verification procedure. However, they did not maintain any documentation of the same. So we carried out any procedure, but we are not maintaining any documentation of the procedure that we are carrying out. Additionally, we did not perform any impairment testing of PPE at the end of the financial year as well. So we are not maintaining the documentation and we are not carrying out the impairment testing. Okay, this is your first thing. Now here it says that Mr. K, the engagement partner, failed to maintain any of the documentation of the verification process, and they did not perform any impairment testing at the end of the financial year. Obviously, this we have discussed over here. Now we need to select the appropriate option as per SA 299. Who are responsible for PPE, sir? We are responsible. So who will be responsible for documentation and impairment testing? We will be responsible. So here Mr. K is severally responsible for his own actions, and the said work was our responsibility because PPE was divided to us. Okay, yes sir, here you might confuse that Mr. K is responsible as well as Mr. B is responsible, because Mr. B is compulsorily required to verify the work of Mr. K. Is our joint auditors required to verify each other's work? No sir, we are entitled to assume that the other joint auditor would have performed the audit as per SAs. Okay, yes sir, so here Mr. B will not be responsible, the other joint auditor will not be responsible, only we will be responsible. Okay, yes sir. Next, the management of the company has adopted a new ARP system according to which an audit trail was started to maintain from 3rd December 2023. So before this, audit trail was not maintained, but after 3rd December 2023 the audit trail was maintained. Now whether the action respected to a reporting requirement of audit trail was justified, auditor said that we need not report about this since the audit trail was available after 3rd December, so we should not report it in the auditor's report. But this reporting is not justified since the audit trail was not operational throughout the year. The requirement is what, sir? That the audit trail should be operational for throughout the period from 1st April to 31st March, but here the audit trail was operational from 3rd December only. So we need to report the audit, we need to report the same in the main audit report. Okay, yes sir, that the audit trail was not operational for the full financial year. Okay, yes sir. Here there is Mr. B, which is an engagement partner of Messrs. B and Company, who was responsible for verifying the procure to pay process. There is a process that he was responsible for. He did not perform any procedures and he just relied on the work of internal auditor without keeping any documentation. Can we rely on the work of internal auditor? Yes, you can rely on the work of internal auditor, but you will have to exercise your own skill and care. You will have to maintain documentation, how you have relied it, what procedures did you perform on the internal audit firm. So you cannot just directly rely on the internal audit firm. So we need to select what is correct, sir. So basically, Mr. B can rely on the work of internal auditor. However, you need to first discuss with the internal audit function. We need to evaluate about the adequacy of their work. We need to document about the evaluation of the work of internal auditor. Okay, yes, sir. Chaliye. Next is what, sir? It says that considering the above case, whether reporting under CARO 2020 will be applicable for ABC Private Limited. So here ABC Private Limited, let me tell you over here. Here ABC Private Limited is a Indian wholly owned subsidiary. Sorry. Yeah, it is an Indian wholly owned subsidiary of WYZ Limited. And WYZ Limited, I am not sure. Maybe it is a unicorn. Okay, it is a public company. You can say. Oh, okay. Listed on a stock exchange. It is a listed company as well. So WYZ Limited is a listed company and ABC Private Limited is an Indian wholly owned subsidiary. So if it is an Indian wholly owned subsidiary, whether paid up share capital is less than 4 crore, even if the turnover is less than 40 crore, it is not a small company since it's a subsidiary company of another company, and the private company limits will also not be applicable because it is a subsidiary of a public company. So therefore ABC Private Limited CARO 2020 reporting will be applicable. So here they have given yes, since the company is wholly owned subsidiary of listed company WYZ Limited, therefore CARO reporting will be applicable. Next, last point is, while preparing the consolidated financial statements of this listed company, there was a division of responsibility between the auditors of WVZ Limited and the auditor of ABC Private Limited. Now where we should report this division of responsibility? So basically this is another subsidiary of WYZ Limited, this is another subsidiary of WYZ Limited, and they both have a division of responsibility. This auditor's responsibility is only this particular entity and this auditor's responsibility is only this particular entity. We have discussed in SSS 600. If you want to give your division of responsibility, that should be mentioned under other matter paragraph because it is relevant to users understanding of auditor's responsibility. Okay, yes sir, this was your case scenario number 7. Let's do your case scenario number 8. What does it say, sir? So let's do question number 1. What does it say? Okay, we need to identify what are the matters that we need to consider while determining CAM. So here there are 3 matters and we need to determine whether we consider these matters while determining CAM or not. So first matter is that the company's income was significantly affected by fluctuations in foreign exchange rates with inadequate hedging arrangements, and we need to evaluate the impact of these transactions on the financial statements. Since there was a significant impact of the events or transactions on our financial statements, therefore this will be determined as a CAM. So yes, this will be determined as a CAM. Second is what, sir? There was a higher risk as assessed and reported by management expert. Is the higher risk reported and assessed by management expert or auditor? Sir, auditor. If the auditor assesses it as a higher risk of material misstatement, then only it is considered as CAM. Here it is assessed by management expert, so it will not be considered as CAM. And the last is the auditor had to make important judgment where the management of the company has already made significant judgment. Significant judgments where auditor and management makes is a CAM. So here it will be CAM. So 1 and 3 will be CAM. Here we will report that 1 and 3 are CAM. Okay. Yes, sir. Second question is, we are need to be the role of, we are the auditor of Cash Limited basically. And based on the above observation, what we need to evaluate or what we need to convey as a control failure and what will be our rationale for considering them as such. So basically these are the some of the options, some of the situations, and where we need to identify, here we need to identify which are the control failures which can be termed as a control failure over here. So first is what? There were staff and officers of the bank who were frequently transferred from one position to another without prior notice. This is a control failure of the bank. Okay? You cannot transfer frequently your staff and officers of the bank without any prior notice. This is a control failure. Second, okay, so sorry. So here we have to identify, just a second, here we have to identify reporting as control failure. Okay. So this was not a control failure, since if your staff is rotated or if your staff is frequently transfer one position to other without prior notice, that means it is good because you are maintaining segregation of duties and you are including an element of unpredictability. So this is not a control failure. Second, there was a cash which was tested daily and counted in full occasionally by another officer of the bank apart from the cashier. Obviously this is a good control. This is not a control failure. Okay, yes sir. Next, there was physical custody of cash which was solely maintained by senior most officer at the branch. No sir, we have already read in bank audit that the physical custody of cash should be maintained by 2 responsible officers. So this is the control failure. Next, the unpaid checks received through the outward clearing were securely stored in the bank's locker. Bro, this is outward clearing. So outward clearing, if there is any unpaid check, we need to either inform the customer or we need to set the unpaid check to the customer, back to the customer. Okay, yes sir. So this is also control failure. So 3 and 4 are your control failure. Look at over here. 3 and 4 are your control failures because cash should always be maintained under joint custody of 2 authorized officers, and unpaid checks about outward clearing should be either dispatched to the customer or we need to inform the customers to collect them from the bank. Okay, yes sir. Next, among the various passion driven activities that is CAM is taking, which are of these generally permitted by ICI? So we need to check which are generally permitted as per clause 11 part 1 of first schedule. Okay, yes sir. So here it is part-time employment with NPO based in Noida. No, part-time employment is not generally permitted. You need to take a special permission. Second, we are involved in agricultural activities on a personally owned agricultural land located outside the Bengal. Can we become farmer? Yes sir, we can become farmer. There is no restriction on. This is generally permitted. Next, we are taking tutorship as a part-time faculty member at a private educational institute in Chennai. No sir, you cannot be part-time. You cannot take part-time practice, part-time tutorship under a private coaching organization. This is a specific permission case. And lastly, you are holding an honorary office leadership in a charitable education institution in Tirunelveli. Yes, you can hold the honorary office leadership in a charitable education institution. That is generally permitted. So 2 and 4 are generally permitted. Okay, yes sir. Now it says, according to which provisions of the Chartered Accountant Act, CAM will be guilty of professional misconduct. Since he has conducted 2 activities without taking prior permission of the institute, then he will be guilty under clause 1 of part 1 of first schedule. Okay, yes sir. Question number 5 says whether there was any professional misconduct. If we have submitted a municipality tender, a CA firm has submitted a municipality tender and that tender was for computerization of records, and while submitting the tender we have also deposited the earnest deposit. Whether we will be guilty, sir? No, we will not be guilty. Why we will not be guilty? Because computerization of records is not a specific reserved field for chartered accountant. If it is an open tender, then we can file the tender as well and we can deposit the earnest deposit as well. So as per the guidelines, a member can respond to any tender which relates to anything other than audit, and we can make earnest deposit in respect of non-exclusive area as well. Okay, Okay, yes sir, this was your case scenario number 8. Now we are going to discuss your case scenario number 9. Let's discuss question number 9. So here in this particular one question, so we are need to ask in Caro 2020, we have to report this particular revaluation or not. So based on revaluation, the change in the carrying amount was from 12.5 crore to 14.5 crore. And if you calculate the percentage, it comes at around 16%. So yes, the change was 10% or more. So you will have to report it in the Caro 2020. Okay, yes, so this was the first MCQ. Second MCQ is basically there was a sanctioned cash credit limit of 5.25 crore. Since the sanctioned cash credit limit is more than 5 crore, therefore the Caro 2020 clause will also be applicable over here. Utilized limit, we do not care about utilized limit, we have to care about the sanction limit, that should be more than 5 crore. Okay, yes sir, so here reporting is required under clause 1D since the company has revalued the amount and the revaluation amount exceeds 10% of the net carrying value. Second is what, yes, reporting is required under clause 2B as well because the sanctioned working capital limit was more than 5 crore. Okay, yes sir, there was a report of audit of State Housing Department of by CG. Now where we have to submit this report, sir? So this is a state government department, so we have to submit it to the governor of the state. Okay, yes sir. Next is with respect to this particular power limited, which of the following statements correctly categorizes the sustainability reporting indicators? So sustainability reporting indicators, there are two types of reporting indicators that we have discussed: essential indicator, leadership indicator. Essential indicator is basically where we have to just perform least of the efforts, and that are mandatory indicators, and leadership indicators are optional indicators where we have to perform more procedures. So here it says, therefore there are the details of emission. So you have a details of emission which you have done already in the past year, that you have to perform least procedures, least efforts for obtaining that particular data. Therefore this will come and cover under essential indicator and they need to be mandatorily disclosed. However, your future energy consumption plan, you will have to take more efforts in deriving that future energy consumption plan. Therefore this is a leadership indicator and it is an optional disclosure. Okay, yes sir. Next it says that CA Nisha would be held guilty of professional misconduct if she offered to become a member of the board of management of Navlo Cooperative Bank, which is a primary urban cooperative bank. So no sir, as per we have discussed already, as per decisions of ethical standard board, she will not be considered guilty. So it is permissible for a CA in practice to be a member of the board of management in primary urban cooperative bank. So she will not be held guilty of professional misconduct if she accepts the offer. Okay, yes sir. Next is what your next is case scenario number 10. First is there was a CFO who received a highly realistic voice message which was obviously false, which was obviously there was a cyber attack. Now since the cyber attack was using a voice message, which is the particular type of cyber attack involved over here, sir? Voice message phishing, voice phishing we have already discussed in digital audit. So it is phishing. Okay, perfect. Second is what, sir? The statutory auditors that were MSS ANP associates determined that the company's internal control over disbursements were deficient. The internal controls were not working properly regarding the change management for vendor banking details, and the loss due to this internal control was material, but it was not determined to be pervasive to the financial statements as a whole. The loss was material but not pervasive, so here we will issue qualified opinion. Okay, yes sir. So here we should issue qualified opinion because it was material but not pervasive. Okay, yes sir. Next, there is a management of Technova that were decided to prepare a statement that detailed the ESG performance, that is environmental, social and governance performance, if the company were to follow the SEBI mandate disclosure on non-financial metrics, which report it would be primarily required to file, being a top 500 listed entity. So here the kids got confused. Here it is saying top 500 listed entities, and we have already discussed in SDG and ESG assurance that integrated reporting is mandatory for top 500 listed entities. So here it should be integrated reporting, right? But we have also discussed that integrated reporting is voluntarily applicable for top 500 listed entity, and here we have asked, as per SEBI mandate, what should be mandatorily disclosed or how should we mandatorily disclose it, and the mandatory disclosure is mandatory for your BRSR reporting, that is your business responsibility and sustainability report, that is applicable on your top 1000 listed entity, and that is mandatory. So here that's why the answer is your BRSR, not the integrated reporting, since it is voluntary, not mandatory. Okay, yes sir. Next, here it says that there is a Messrs and Associates, can he accept an offer to provide internal audit services to a company for current financial year's Q4 period? Sir, you are the statutory auditor, can I provide the internal audit services to the statutory auditor? No, I cannot provide. Section 144, this is prohibited. So statutory auditor cannot provide the internal audit services to the same company. Okay, yes sir, this was your case scenario number 10. Now let's discuss case scenario number 11, and if you are able to understand everything, if you think this is the most detailed, effective, crisp revision, crisp marathon of case scenarios, then please do like the video to mark your attendance, and please do like the video to support me, to motivate me to put more videos in English for you guys. Okay, yes sir, let's do case scenario number 11 and also share it with your friends so that they are able to take the benefit of this particular case scenario marathon as well. Okay, yes sir, let's do case scenario number 11. What does case scenario number 11 say, sir? It says which of the following is correct regarding CA Supriya who have approached by a hospitality client for conducting mystery audit. Can CA Supriya conduct mystery audit? Yes sir, we can conduct mystery audit because it is a permitted service. This is your correct answer. What is the incorrect answer, or when which option you can get confused? We can accept the assignment only if the client is not an existing audit client. Can we conduct mystery audit for an audit client? Yes, we can conduct mystery audit for an existing audit client as well. There is no bar on it, there is no limitation on it. Okay, yes sir. Next is question number 2. It says what should CA Supriya do in case of Cozy Textile Limited? So basically in Cozy Textile Limited, it is an audit client. What we can do, sir? We can decline the acceptance. So basically Cozy Textiles Limited has also approached us for compilation services. Can, as an auditor of that particular kind, can I enter into, or can I perform compilation engagement? No sir, I am compiling the financial statements and I am also auditing the financial statements. There will be a self-review threat involved over here, so we should decline the assignment for compilation engagement under SRS 4410. Okay, yes sir. Next, can CA Supriya digitally sign the ROC form for Fair Private Limited? In the Fair Private Limited, we are director simpliciter. Being a director simpliciter, can I sign ROC forms? No sir, I cannot sign. This is against the decisions of Ethical Standard Board, since it will be in direct conflict of my role. Okay, yes sir. Next, does CA Supriya is correct in using a messaging application for marketing? Can I use a messaging application? No sir, as per recent Ethical Standard Board decision, we cannot use a messaging application as well. It is not permitted. It is not permitted since it amounts to solicitation. Okay, yes sir, this was your 4 MCQs in your case scenario number 11. Let's discuss your case scenario number 12. What does case scenario number 12 say, sir? First of all, as per SQC1, which is the most appropriate action for CA Rajul after assessing her audit team lacks experience in pharma R&D? So basically there is a kind in pharma R&D and we are lacking experience in pharma R&D. So as per SQC1, what should I do? First option is we should proceed with the audit using standard checklist and procedure. Just audit the, it doesn't matter whether you don't have the experience, just proceed with the audit. This is particularly wrong. Second, we need to ignore the concern as the client expects timely reporting. Client is expecting timely reporting, so we should ignore the concern. No sir, this is also wrong. Third, we need to delegate this responsibility to junior staff which is familiar with manufacturing audits. No sir, we cannot transfer this, delegate this responsibility who is responsible for manufacturing audits, because this is a pharma R&D, not a manufacturing audit. So what we should do actually, sir, we need to raise a concern internally and we need to consider whether we need to involve any external experts of specialists who are who have the expertise in pharma R&D, so that they can help us in auditing this pharma R&D company. Okay, yes sir, this is correct as per SQC1. Okay. Next is that there was a previous Big Four auditor who has resigned due to scope limitations. Now, if there is an auditor who has resigned due to the scope limitations previously, and we have accepted the audit of this particular company, what should we do, sir? What should we exactly check? We need to proceed after understanding the nature of scope limitations. What was the limitation that were put on the Big Four auditor? And we need to document the evaluation. We need, if there is an issue while performing acceptance and continuous procedures, if we think there is an issue and even after that we are accepting the engagement, then we need to document how we have resolved the issue. So here we are saying that we need to document our evaluation, why we are accepting this particular client. Okay, yes sir. Next is what, sir? Under SA 220, what is auditor's responsibility as an engagement partner regarding audit quality? What is our responsibility as per audit quality? First, it says that we need to ensure only documentation is maintained. No sir. Next, we need to delegate all the key decisions to the audit manager. No sir, we need to take the key decisions ourselves. We need to report only on the audit committee. No sir, there is no mention as audit committee in SA 220. What should we exactly do, sir, regarding the audit quality? We need to ensure that there is appropriate direction, supervision and review of the audit work. We need to properly DSR the work to our team members. Okay, yes sir, direction, supervision and review. This was your case scenario number 12. Let's do case scenario number 13. What it says, sir? So basically 3 and 4 we have to do from above. So here it says which items should CA Mansi select for testing so that they can get samples on which vendor balance reconciliations can be formed. Now, what is vendor balance reconciliation? So here you can see that there is a balance as per general ledger, balance as per our trial balance, and this is balance as per external confirmation. We have to do a reconciliation between both the balances. Now, on what vendors we should perform this balance reconciliation? This is what is being asked. So first is major vendors where confirmation balances agrees with the general ledger. If the confirmation balance is agreeing with the general ledger, what reconciliation will we perform, bata? What reconciliation will we perform? We will not be able to perform any reconciliation, so this we cannot select. And otherwise, apart from this, all the vendor balances we can select. Vendors which have high volume of business with Simran Edible Oil Limited, we should select them. Vendors with balances of 15 lakh or more outstanding at the year end, we should select them. Vendors with balances of 15 lakh or less outstanding at the year end, we should select them. Why, sir? Because every item in the population should have a no chance of selection in your sample. And we are doing sampling over here, so we should select the samples from all the characteristics, all the diversities of the population. Okay, yes sir. So 2, 3 and 4. Okay, yes sir. Next, how can Miss Mansi audit the operating effectiveness of internal control around the accounting of trade payables? So we are auditing the TOC of accounting of trade payables. How we can do that? First is we need to recalculate the aging of trade payables to identify whether the balances have been, may not be agreeing with the audit evidence. No sir, while calculating aging, we are not checking the TOC. Okay, yes sir. First is it. Second, we need to select the samples from the supplier balance that is based on scientific random sampling approach and verify the third party evidence. No, this is not a TOC, this is substantive procedure. This is also substantive procedure. Next, we are calculating the trade payables days to use in analytical procedure. This is also substantive procedure. So what is exactly test of control, sir? Inputting a fake purchase invoice into the client system to see if it is processed accurately. We are putting a fake purchase invoice to see how this fake purchase invoice is processed in this particular client system. That's how we are testing the internal controls. Okay, yes sir. Next is third, sir. It is saying what are the audit procedures that we should perform to verify whether the payable balances of Krishi sunflower seeds are correctly recorded in the financial statements. Now what has happened with Krishi sunflower seeds? So here you can see balance as per general ledger is 65 lakh rupees, but balance as per external confirmation is 80 lakh rupees. So Krishi is saying that we need to pay 80 lakh rupees, while management is saying that we just need to pay 65 lakh rupees. So what has happened over here? So why is there a difference? The difference is because there were two invoices of 10 lakh and 5 lakh each dated 25th March and 27th March, and as per the accounts payable executive, these invoices were received on 3rd April. So when we received these invoices, we accounted these invoices on 3rd April, that is in the next year. So we haven't accounted this 15 lakh in this particular year. Now here, while reconciling this particular balance, what we need to check, how we need to confirm about this 10 lakh and 5 lakh is our question. Therefore, it is not recorded in the financial statement. So what we will do, sir? First of all, it says that we need to send the confirmation to Krishi to request the confirm outstanding balance. Arey Baba, we have already sent the confirmation, and that's how Krishi has got us 80 lakh as a balance now. So we do not need to send the confirmation. Second, we need to verify the bank payments for the period post 31st March 2024 for any payment of evidence of payment of invoice. Arey bhai, if we have received the invoice on 3rd April, we would have paid the invoice after 3rd April, right? So if we are obtaining the evidence, then we are not obtaining any evidence whether we need to be recorded on pre year end or post year end. So that is not the case here. We cannot verify just on the bank payments. Next, we need to review the listing of the purchase order to confirm whether it purchased to the current year or it pertains to the next financial year. Whether on the basis of purchase order we decide whether the purchases will be recorded in this year or the next year. No sir. Then what basis we decide whether the trade receivable will be recorded in this year or the next year? Based on risk and rewards transfer. If the risk and rewards transfer was done in this year, then we will record it in this year. If the risk and reward transfer was done in next year, then we will record it next year. So here what we will verify, sir, we will inspect the goods received note when the goods were actually received to us to determine the date of receipt of raw material. And if the goods were received to us in this year, then we will record it in this year, irrespective of whether the invoice was received in next year or not. Okay, yes sir, this is the main particular thing. Next, what would be a proper course of action we need to take for CMRC for an error amounting to 4 lakh and 5 lakh in the given scenario? So what is the error, sir? 4 lakh and 5 lakh. So we need the samples to verify the trade payable balances, and these samples covered 30% of the population. So we did the 30% population of trade payables, and we came across two errors that were amounting to 12 lakh. Okay, so here 4 lakh error was due to one invoice that was not recorded due to weak internal inefficient control mechanism. So there was an invoice which was not recorded due to inefficient control mechanism. So we need to project this particular 4 lakh to your particular trade payable balances to see how many invoices would have been there which would not have been processed. And second is there was an 8 lakh error which was made by Mr. Dhruv, an executive who came as a temporary replacement for 1 week in the place of Mrs. Kamini, who is permanent accountant of the company. So this particular 8 lakh error was done by one time, but that by Mr. Dhruv, and this was the temporary replacement for 1 week, and this mistake was clerical in nature. And since the mistake was clerical in nature, then we will need to project this particular balance as well in the population. So here what it is saying, sir, what we need to do first, it says that we need to, the total amount of error is below the materiality and therefore it should be considered or not considered. Sir, this is sample. In the sample, we have got this misstatement. So how can we say that it is low materiality? We need to project the misstatement, then only we will be able to identify now it is better, it is below materiality or not. Okay, yes, sir, this is wrong. Next, she should ask the Simran edible oil to adjust 12 lakh in the payable balance and rectify the same. Just ask to adjust 12 lakh, but 12 lakh was found from the sample. We have not projected it yet, so we do not know the actual misstatement. So this is also wrong. Next, the different set of samples representing the same amount should be selected to check whether the same errors are getting repeated. If it is not, then the sample observation should be waived off. It is saying that we need to select different samples so that we need to obtain an evidence whether same observation is being done in different samples or not. We do not have that time, bro. I have already selected 30% samples. You are asking me to select more 30% samples to see whether the same observation are carrying out in those 30% samples or not. I cannot do that. So what I have to do, sir, I will have to consider the impact of errors in the samples, that is test of details, and we need to project and extrapolate across the whole population. Basically, we need to project this misstatement to the whole population. Okay, yes, sir. This was your case scenario number 13. Let's do case scenario number 14. What does it say, sir? First of all, the management is arguing that the reviewer, who is the reviewer over here? There is a due diligence review going on. So the reviewer of due diligence has no power to assess the business feasibility because the company is running profitable from past many years. Is this correct, sir? Can, as a due diligence reviewer, I can review the business feasibility of the company? Yes, I can review. It is my choice, my life, my rules. This is my choice. I want to review the business feasibility. So the reviewer is correct, as due diligence covered the assessment of business feasibility as well. Even if the business is running smooth from many years, I don't care about it. If I want to do business feasibility test, I will do the business feasibility test. Okay, yes, sir. Now here, the due diligence reviewer was giving the audited financial statements for the year ended March 2024. Okay, yes, sir. However, the reviewer asked for the financial statements of 1 year before as well, which were already audited by the statutory auditors of the company, and management said we are not giving this to you. So how can the management say that we are not giving the financial statements of the previous to previous year because the previous to previous year was audited by the statutory auditor? I don't care. I am a due diligence reviewer. If I have asked the financial statements from you, you will have to give me. So here it says the reviewer can ask for the documents even for the period for which audit is completed. I don't care about it. Okay, yes. Next is the reviewer for the due diligence reviewed the consultation documents pertaining to various litigations that involved matter of taxation and also asked the documents that related to these matters. Further, he suggested the management that the decision taken by the company was not correct. Can the due diligence reviewer suggest the management about any of the decision that is taken by the company? Yes, due diligence reviewer is for this particular thing only. So a reviewer needs to have an independent assessment. Reviewer needs to do an independent assessment of legal and tax cases, and any of the outcome that has come from this particular assessment, we need to be discussed with the management. So if he thinks that the decision taken by the management is wrong, he can say to the management that your decision is wrong. Okay, yes, sir. Next thing, the management has refused to share the details of promoters. Is it correct, sir? No. Due diligence involves the checking the background of promoters as well. So here the contention of management is not correct. Okay, yes, sir. This was your case scenario number 14. Let's do case scenario number 15. What does it say, sir? It says that whether CA Herman will be held guilty for reflecting income of currency and commodity derivative as business income. So here CA Herman has done currency and commodity derivative as business income. Can we do commodity derivative as business income? No, sir. We cannot transact in commodity derivative. That is not allowed. So yes, CA Herman will be held guilty for professional misconduct for representing currency and commodity derivative, since commodity derivative is not allowed. Okay, yes, sir. Here it says whether CA Herman will be liable for misconduct for uploading digitally signed resignation letter. If yes, under which clause? So what has happened? Let us see over here. So here there is a company which has approached the CA Herman to digitally sign and upload a resignation form that is related to one of its directors on the registrar of companies portal. Okay, yes, sir. However, the signature of this particular director was copy pasted by another director of the company. Now, without checking this particular authenticity of the resignation letter, CA Herman has directly digitally signed the form and uploaded to the ROC portal. Here CA Herman will be guilty. Yes, obviously CA Herman will be guilty. CA Herman has not performed his work based on due diligence and he is grossly negligent in performance of his duties. So which clause will be applicable over here? Triple C's OMMG. G for grossly negligent, that is CA Herman will be guilty for clause 7 part 1 second schedule. Okay, yes, sir. We have already discussed how to remember all the clauses in our professional ethics detailed revision video that is uploaded for Hindi and English students as well. Okay, yes, sir. Next, now before which authority CA Harman's misconduct can be placed for disciplinary proceedings. So here you are guilty under schedule 1 as well, and you are guilty under schedule 2 as well. So which particular authority will be covered under here? Here you will be sent to disciplinary committee because it is covered under both the schedule. Okay, yes sir. What is the minimum punishment that could be granted? Minimum punishment is basically you are just reprimanding the member. You are just scolding the member for doing this particular thing. So this is the minimum punishment that you can give to a member. So this is reprimanding the member is the minimum punishment. Okay, yes sir, this was your case scenario number 15. Let's do case scenario number 16. What does case scenario number 16 say, sir? So here, whether the opinion of Mahoer for referring the work of auditor's expert in the auditor report can be considered as valid. Can we refer the work of auditor's expert in the report? No sir, unless law and regulation require, or unless it is relevant to user's understanding of the modification, you cannot refer the work of the auditor's report. So here, no, it was not required. It was not correct, as this reference was not relevant to understanding the audit opinion, and it was not required by law and regulation as well. Okay, yes sir. What is the second point, sir? Whether the opinion of Lloyds and Company of audit firm for treating the item as a misstatement in case of test of control, as well as in case of test of details for which joint auditors were not able to apply the designed design procedures or suitable alternative procedure, can be considered valid. Can, in case of test of controls, do we consider the item as a misstatement? No sir. What do we consider then? Deviation. So here considering misstatement is incorrect. So here it will say that such item will be treated as misstatement only in case of test of details. In case of test of controls, it will be considered as a deviation. Okay, yes sir. Next is whether the insistence by a joint auditor for determining the implications for not obtaining response to positive confirmation request on the audit opinion can be considered valid. So basically this particular joint auditor is saying that if you are not receiving any response to the positive confirmation request, then you should consider its implication, consider its impact on the audit opinion. Now, whether this particular statement is correct, yes, obviously we need to consider the impact of non-response to the positive confirmation request, because in such a case, the auditor will have to determine the implication for the audit and the auditor opinion as per SS 705. Okay, yes, sir. Question number 4, what does it say, sir? Whether Namo and Company would be considered to have satisfied the requirements of communicating with the previous auditor. So we need to communicate to the previous auditor whenever we are accepting any audit engagement. So here what we have done, sir, we have communicated via registered post acknowledgement due to the previous joint auditor, but the said post was received back with the remarks office found logged. Now if the office is found logged and we have sent it to registered post acknowledgement due, then will it be considered that we have communicated with the previous auditor? Yes, it will be a deemed communication to the previous auditor. So here Namo and Company will not be held guilty. Okay, yes sir. So here it will be considered that such post was delivered. Okay, yes sir, this was your case scenario number 16. Now let's do case scenario number 17. What does case scenario number 17 say, sir? We are doing it everything in a detailed and crisp way and covering everything that we should be covering. So if you are liking this, please like the video to motivate me to put more videos in English. Chaliye. So yes, here what it is saying that we are finalizing the audit report for CA Kamlesh when we have decided to present the early adoption of Ind AS under other matter paragraph. We have already covered this one of the essay, one of the MCQs, that early adoption of Ind AS is covered under emphasis of matter paragraph, not other matter paragraph. Okay, yes sir. Chaliye, kindly guide CA Ramesh with respect to the correct reporting. So the correct reporting we need to do it under emphasis of matter paragraph because it is of importance to fundamental to users understanding of the financial statements. Okay, yes sir. Let's do question number 2. Was it to say, sir, there is a CA Kamlesh that has done the risk assessment and they have an expectation that controls at service organization are operating effectively. Okay, so if we are having an expectation that the controls are operating effectively, then we need to test the controls, right? Otherwise, how we will rely on the controls? So if we are relying on the control, we need to test the controls. But here CA Kamlesh is saying that there is no requirement to obtain type 2 report. Now you know that type 2 report is specifically for test of controls, for obtaining assurance regarding the operating effectiveness of control. And here CA Kamlesh is saying we do not need to obtain type 2 report. That is completely wrong, because if you are relying on the controls of service organization, you will need to obtain the test of controls results as well. Okay, yes sir. So here when the auditor's risk assessment includes an expectation that controls of service organization are operating effectively, then we need to obtain audit evidence regarding the operating effectiveness of controls, which can be by obtaining type 2 report. Okay, yes sir. Next is question number 3. So here it says that CA Kamlesh was not sure regarding the UDIN requirement. So UDIN is required for all those reports I have already discussed in Mahasmart Marathon, but I am telling you UDIN is required in all those reports that are submitted to outside parties so that they can just check the authenticity of documents. Now here we are sending the letter to those charged with governance. So sending a letter to those charged with governance will just stay with those charged with governance internally within the organization. authorization, do we need to mention the UDIN in that particular letter? No, sir. UDIN is only required for statutory audit report and obviously other reports as well, but they have just written statutory audit report, but it is not required for communication that is performed under SA 250 or 265, since it is just done to the TCWG internally. Okay, yes sir. Let's do, okay, this was your case scenario number 17. Let's do case scenario number 18. So what does it say, sir? Here we need to do question number 1 from here. It says, there is CM Radul, a practicing chartered accountant, who has been appointed as statutory auditor of this particular limited company, which is a reputed listed company which is engaged in manufacturing of electronic products as per Companies Act 2013. Okay. In addition to audit responsibilities, we are actively involved in advising the government on proposed legislation that is aimed at attracting the investments and advanced technology in the electronic products sector. So in which our client is working, we are advising the government as well. We have publicly advocated the proposed policy in TV debates, articles in business newspapers, and advisory commission submissions to the government, and in all such public appearances we have disclosed our role as an auditor of PQT Limited. So basically we are doing public licensing, government licensing for our particular audit client. This is covered under which type of thread, sir? They have directly given you an advantage of a hint of advocated, which means advocacy threats is covered over here. Okay, yes sir. So this is covered under advocacy threat. Second is the provision for loss asset of 2 crore correct as per RBI norm? So here there is a loss asset of 2 crore and we have done a provision of 2 crore for the loss asset. Is it correct? Yes, this is correct, because on loss asset we have to do 100% provision. Okay, yes sir. Next is there is Fincol Limited, which has classified 15 crore of loan as substandard asset. Okay, what should be the minimum provision required to this particular category? In NBFC, if there is a substandard asset, what is the provision for substandard assets, sir? 10% of substandard asset. So 15 crore, that will be 1.5 crore. Okay, yes sir. Next is there is a Fincop Limited, obviously an NBFC, which has 8 crore in doubtful asset of 1 to 3 years. What is and it has made a provision of 2 crore. What is a shortfall in provisioning? So basically if there is a D2 category and that is of 1 to 3 years, then the provision to be made is for 30% of your asset amount. So 30% of 8 crore is for what, sir? 2.4 crore. You have already made the provision of 2 crore, then there's a shortfall of 0.4 crores. Okay, yes sir. This was your case scenario number 18. Now we are doing your case scenario number 19. Let's discuss case scenario number 19. What does case scenario number 19 is saying? So basically, while we are conducting the substantive procedures, we notice a substantive significant increase in the sales during the last quarter of the financial year. Okay, yes sir. So the major portion of this increase was because of a sale of 8 crore, which was to a new customer, Tech Synergy Solutions Private Limited, which was just incorporated on 1st October. So a new company which is incorporated on 1st October, we did a major portion of our increase in sales to that particular company. Okay, yes sir. When we were inquiring about this particular company, we got to know that there were payment that were made, payment for these sales were already received on 5th April, just before commenced our audit. Now upon further investigation, we got to know that one of the directors of this particular company was the husband of the daughter of our company CFO. So basically they are kind of interrelated, they were kind of related parties. Okay, yes sir. Now Mr. Alok, okay, CFO is a Mr. Alok. Now when as a auditor we brought this information to CFO, the CFO dismissed it. It said that this is just a mere coincidence and this one transaction was conducted at an arm's length price. We also said that the payment was also fully received. There was no risk of misstatement in this particular transaction, and management also refused to disclose their relationship in the financial statement, saying that it was not a related party transaction as per applicable FRF. Therefore, we will not be reporting this particular transaction in our financial statements. That's what being stated by the CFO as well. Okay, yes sir. And and if we will disclose this as a related party transaction, then we will have to do unnecessary compliance. And it was also observed that the approval by way of resolution was also not obtained by the management before entering into contract with the Tech Synergy. So basically they haven't obtained the board resolution or the board approval as well, okay, for entering into this type of related party transaction. Now with reference to this 8 crore sales transaction with Tech Synergy Solutions Limited and the management's refusal to disclose their relationship with the entity, how we as an auditor should assess this matter in accordance with SF 240. SF 240 relates to what, sir? Fraud in the audit of financial statements. So how we should assess this matter in relation to SF 240, whether we should consider this as a fraud or not, that's what is going to ask by the ICI. So first option is CA Gaurav should accept the CFO's explanation and conclude that the transaction does not pose any significant risk as the payment was fully received subsequent to the year end, which mitigates the risk of financial loss. So it says that since we do not have any financial loss, so we do not have to disclose this in our auditor's report or in the financial statements, and we should just accept the CFO's explanation, which is completely false. Second is that the auditor can rely on the management's assertion that the transaction was as an arm length price and the relationship does not meet the technical definition of related party. Therefore, we should not do any further action. So it's saying that management has said us that the transaction was at arm length price and the relationship is not a related party as per AFRF. Then we should just accept the management's assertion and we should not perform any other procedures. This is also wrong. Next, we should only request a written representation from management, the confirming about the nature of the transaction and that the no related party relationship exists, and then we should proceed to issue an unmodified opinion. No sir, we cannot just obtain written representation because written representation is not a sufficient and appropriate audit evidence in itself. So what we should do, sir, we should treat the transaction as indicative of a significant risk of material misstatement. There can be a significant risk of material misstatement involved over here, and we should consider the impact of the audit, including the reliability of management representation regardless of the subsequent payment. Even if there was a subsequent payment, then also we need to consider this as a significant risk of material misstatement. Okay, yes sir. Chaliye, let's discuss the MCQ number 2. What it is saying, sir, what is the reporting responsibility of the auditor as per para 3.1 of Caro 2020 regarding the undisposed robotic arm with a written down value of 2.5 crore that was not physically located. So there is an undisposed robotic arm. So basically it is PP, they want to say it is a PP which has a value of 2.5 crore and we are not able to find that PP in physical verification. While doing physical verification of PP, we are not able to find the PP of 2.5 crore. Now, what is our reporting responsibility? How we should report it? So it says that as an auditor, we need to state in our audit report that there is a material discrepancy of 2.5 crore during the physical verification, and this has not been dealt in the books of accounts because it is still showing in the books of accounts of 2.5 crore while we are not able to identify or physically verify this PPE. Okay, yes sir. Next, we need to assume that this particular auditor's father purchased the shares with the face value of 10 lakh in Autobots Limited, the subsidiary company, on 1st April 2025. Now, what is the impact on the audit engagement of IPRL Limited companies and the Chartered Accountant Act? So basically, if my father, I am the auditor and my father purchased shares in the company of face value 10 lakh rupees, then will I be disqualified as an auditor? Yes. My relative can hold the shares only of up to 1 lakh in face value. Here face value is given. So face value is more than 1 lakh rupees. So we will be disqualified from being the auditor of IRPL because the relative hold the securities in subsidiary of the company exceeding the prescribed limit of 1 lakh rupee, and continuing the engagement would constitute a professional misconduct. Now here, don't get confused with this 60 days limit. Here in our ICA module, 60 days limit is not given. So we will not consider this 60-day limit. We will directly say that since we are holding the relative is holding the security of more than 1 lakh rupees, so we will be disqualified. Okay, without waiting for 60 days period. Okay, yes sir. Now, what is the most appropriate type of audit opinion? As an auditor, we need to express in the IRPL's financial statements while considering everything that we have already discussed regarding that 8 crore unresolved issues of revenue, regarding the 2.5 crore asset that is missing, regarding the subsidiaries qualified opinion. There is a qualified opinion in this subsidiary as well. So what we should do, or which opinion we should issue? So here you can see that the misstatement is not specified to a particular account. The misstatement is spreaded in the financial statement and it is in multiple accounts. So which type of opinion we should issue, sir? Obviously we need to issue adverse opinion because the misstatement has an effect of material and pervasive to the financial statement as a whole are misleading. Okay, yes sir. Therefore we need to issue adverse opinion. Perfect. Okay, chaliye. Let's discuss the fifth MCQ. It says that if CA Gaurav surrenders to the pressure from IRPL's management, if the auditor is surrendering to the pressure of the management and issues an unmodified audit report, auditor says no, I cannot issue adverse opinion, management is pressuring me and I will issue unmodified audit report despite the unresolved issues regarding the revenue, despite the unverified reporting arm, we will be guilty of professional misconduct. Now, which clauses of part 1 of second schedule to the chartered accountant would be guilty? So in which clauses we would be guilty? We would be guilty under, first of all, there was a material fact which was not disclosed regarding the related party transaction. Secondly, there is a material misstatement relating to PPA discrepancy that we are not disclosing. And third, we are grossly negligent in conduct of our duties. We are not following our duties as per due diligence. Therefore, we will be guilty under 3 clauses, clause 5, 6, 7. Clause 5 is about material fact, 6 is about material misstatement, and 7 is about grossly negligent and due diligence. Okay, yes sir. So in these three clauses, we will be guilty. Okay, yes sir. This was your clause number 19. Let's do clause number 20. What does clause number 20 say, sir? So basically, in question number 1, we need to reconsider the requirements of asset 250 and the specific context of this NBFC audit, here what has happened, sir, there is a non-classification of loan accounts worth 15 crore as NPA. So 15 crore was to be classified as an NPA, but NBFC has not classified as an NPA. Now as an auditor, what should I do? As per SA 250 and as per SA NBFC audit, as per NBFC audit, what should I do, sir? So here it says that we need to inform the management that this non-classification means there is a material misstatement regarding the non-compliance with RBI's mandatory prudential requirement, because RBI has mandated to classify this particular asset as NPA. So if the management refuses to correct this by reclassifying the asset and making the provision, then we need to modify the audit opinion. So as per SA 250, what should we do, sir? We need to modify the our audit opinion. Okay, yes sir, because there is incorrect classification and there is a material misstatement in the financial statements. Okay, yes sir. Here it is saying, so here what has happened, sir, in April 2025, impressed with the firm's diligence, the management of SCL has offered tax audit engagement under section 44AB to MSA for the assessment year 2025-26. Okay, yes sir. CA Mehta has reviewed the firm's workload for the assessment year. CA Mehta has already signed 55 tax audit reports and CA Arjun had signed 60 tax audit reports. So there were two partners and they have signed in total 115 tax audit reports. Two partner has a limit of 120 audit reports. So how many audit reports we can more sign, sir? 5 tax audit reports we can more sign. So can we accept the tax audit report of this particular SCL? Yes sir, we can accept because it is within the limit. That's what the question is about to ask. So yes, we can accept the engagement because it is in the specified limit of 60 tax audit that is applied to each partner individually, and the firm can still take 5 more tax audits which is in the limit of 120 tax audits for the entire firm. Okay, yes sir. Next is question number 3. What does it say, sir? So there is CA Mehta who has identified the matter regarding NPA classification and non-disclosure. So there is an NPA class, there is a incorrect NPA classification and then there is a non-disclosure of lawsuit. Okay, then these are the two things that is there in the case scenario, and these are the most significant issues for the entire audit. Okay, yes. Second, we need to highlight these matters prominently in our report as key audit matter. We are thinking to highlight these matters as a key audit matter. Considering the nature of matter, which of the following is the only appropriate method for CA Mehta to communicate in this audit report? Now tell me, if there is a material misstatement in the financial statements, can I highlight this as a key audit matter? No sir. Then which is the only method, sir? The only method is to describe them in basis for modification paragraph. We need to modify our report and then we need to give them basis for modification paragraph in which we need to either qualify our opinion or adverse opinion. Okay, yes sir, we cannot give them in the CAM. Okay, yes sir, because CAM is not a substitute for modified opinion. Okay, yes sir. Now, apart from making any inquiries with the management regarding the management's assessment of lawsuit is remote, which audit procedures should be designed and performed by CA Mehta? So we are assessing and performing all the procedures regarding the outcome of the lawsuit. Now what procedures I need to perform as an auditor of the company? So we need to seek direct communication as per SA 7501. We need to seek direct communication with the entity's external legal counsel. How we will seek direct communication? Through a general letter of inquiry which will be prepared by management and sent by auditor, in which we are requesting the entity's external legal counsel to communicate directly with the auditor. Okay, yes sir. And other options are just time pass. Here it is written prepared and sent by management. No, it is prepared by management but sent by auditor. Okay, yes sir. This we have to do once we want to assess the outcome of litigation. Okay, yes sir. This was your case scenario number 20. 20 case scenarios are already done, and again we are going to do more 40 case scenarios, and we will be done with all the 60 case scenarios. If you are liking it, if you are loving this particular marathon, then please do like it. That will definitely motivate me to make more videos for you. Let's do case scenario number 21. What does it say, sir? So it says there is a delayed disclosure of environmental violations. We have done some environmental violation and there is a delayed disclosures at the new machine manufacturing plant, which is contrary to the BRSR principle. So basically we have to disclose. We have to all the business decisions we have to disclose. Now this particular thing is written in which principle, sir? That is written in principle number 1. Ethics and transparency. We have discussed in the memory technique that I have already made a new technique for learning 9 principles of our BRSR, and in BRSR the first one was ethics and transparency. So principle number 1, ethics, transparency and accountability. We were not transparent regarding the environmental violation, so we have violated this principle number 1. Okay, yes sir. Next, which clause of CARO is most likely to require reporting in respect of delayed wages and labor related statutory non-compliances? So if there is a payment which is statutory and we have not complied it, which under under which clause will it come under Caro 2020, sir? Obviously our statutory dues. It was statutory dues. So clause number 7, statutory dues. Okay, yes sir. Next, there were grievances that are raised by contractual workers regarding delayed wages and unsafe working conditions. So relating to employees, which particular principle is there in BRSR? Third principle that talks about promoting the well-being of all employees, including those in value chain. Okay, yes sir. Next, question number 4, which is the most appropriate response as an auditor we can give by becoming aware of environmental and labor law non-compliances as per relevant essay. So there is an environmental and labor law non-compliance. So what should we do as an auditor? We should evaluate their implications under applicable laws and communicate with the TCWG and consider appropriate appropriate reporting. Obviously, we need to evaluate the implication. We need to communicate to TCWG and check how they are impacting our reporting as well. Okay, yes sir. Next is question number 5. We are sharing the customer data with the third-party marketing agencies without explicit consent. Now, what it is, which particular principle it is violating, sir? Data privacy. We need to maintain data privacy of the consumer. In which principle we have studied this? In principle number 9. So here, provide value to the consumers in a responsible manner is what we are violating by sharing the data. Okay, yes sir. This was your case scenario number 21. Let's do case scenario number 22. What does it say, sir? So here it says, which of the following activities are undertaken by Wire Limited falls under environmental pillar of ESG. So environmental pillar, which of the following activities falls? First is constitution of board level committees. So anything that is related to your entity, under the entity, any organization structure and anything. So that is called governance. Second is adoption of a whistleblower mechanism. So whistleblower mechanism is inside the entity, that is governance. Next is community development initiatives. So you are developing the community, which means that is social. And last is installation of solar power facilities and water recycling systems, means you are concerned with environment, that is environment. Okay, yes sir. Next, policies relating to labor welfare, gender diversity, community development primarily relate to which pillar, sir? We have already discussed community development, that relate to social pillar. Okay, yes sir. Now the instruction of CA Ankur, the partner of ABI, Ankur, not Ankush, Ankur. So here the instruction of CA Ankur, partner of APR and Associates, to its article assistant CM here is in compliance with which of the provisions of Chartered Accountant Act. So what was the instruction? Basically, CA Ankur instructed his article assistant to publish a detailed post on its website and social media platform highlighting its role in conducting ESG and digital audit of listed manufacturing company using AI based tools, and to invite other corporates to approach the firm for similar assignments. So basically we are posting on our social media to attract more audit clients. This is violative of which of the clauses of professional ethics, sir? This is violating clause 6 part 1 first schedule of our professional ethics, that says us that we cannot advertise ourselves. Okay, yes sir. Next is what's the question number 4? The presence of independent director and constitution of audit and risk management committees indicate adherence to. So basically we are hiring independent director, we are forming committees, so that is all part of our governance pillar. Okay, yes sir. Chaliye, this was your case scenario number 22. Let's do case scenario number 23. What it says, the question number 1, their firm has engaged Mr. Varun, a non-chartered accountant, so that it can assist in administrative coordination, client communication and licensing work. The firm, as a firm, we have paid him a portion of professional receipts. And while paying the portion of professional receipts, we are describing it as a legal constituency and office support charges, although Mr. Varun does not possess any recognized professional qualification prescribed by the council. Now here, portion of professional receipts means what, sir? We are giving him percentage of fees. So while can we give percentage of fees to a non-CA? No. Who does not have any professional qualification, can we give to them? No, sir. So here we will be guilty in clause 2. We should not give in Hindi na dene ka na lene ka, clause 2 part 1 first schedule. So here we will guilty under clause 2 part 1 first schedule. Okay, yes sir. There was a phone call that is received by CFO for requesting OTP details to reverse a failed transaction. So here there was a phone call, which means there was a voice involved here. Whenever there is a voice involved over in the cyber attack, then it is called vishing. So here also vishing, we have already discussed in the previous one of the case scenarios. Next, third is what, sir? So let's see what from the concept book. Here it says, with the prior approval of the council, CA Kashan has purchased the goodwill from Miss Vishakha. Who is Miss Vishakha? She is the wife of deceased deceased chartered accountant. Now following this acquisition, the firm witnessed rapid expansion. So basically it is saying that we have purchased goodwill from a wife of deceased chartered accountant after taking approval of council. So whether we can do it, can we purchase goodwill from a non-CA, since Miss Vishakha is a non-CA? Yes, we can do that because she was the deceased legal hire of a deceased chartered accountant. So yes, purchase of goodwill from legal hire with council approval is permissible. Okay, yes sir. Last is what? There is an email that is sent to managing director impersonating the chairman. So it is talking about all the big people in the organization, all the officers in the organization. So whenever we are catching the elephant in the room, which means the big persons in the room, it is called veiling. So this cyber attack is called veiling because it involves managing director and chairman. Okay, yes sir, this was your case scenario number 23. Let's do case scenario number 24. Question number 1, what it says, sir? It says there was Mrs. Bat, a firm of chartered accountant, who has launched its official website batca.com. That is perfectly fine, no doubt about it. The website features bright neon colors. There's no doubt about it. Details of partners, that is also allowed. Listed some major client with fees charged. That is not allowed unless there is a regulatory requirement. So this is wrong. The website also uses a push technology. That is also wrong. You need to use a pull technology. So here you will be held guilty. The firm is violation of guidelines because it uses push technology and also disclosing the client name without any regulatory requirement. Okay, yes sir. Next, in the given case, whether the approach of auditing, what is the approach? That is, they are relying on written representation and MIS with respect to reporting under CARO and essays. Is it appropriate, sir? No, you cannot just rely on written representation and any data that is driven from the MIS. You need to perform more audit procedures and you need to obtain more audit evidence. So the auditor's approach is not appropriate because management written representation and MIS cannot substitute our independent audit procedures for complying with essays and CARO. Okay, yes sir. What does question number 3 okay, 3 is here only. So here, what does here question number 3 says? It says whether Mr. P will be held guilty for professional misconduct while handing over the firm's biodata during a TV interview under CA. Yes sir, you cannot hand over the firm biodata during a TV interview. You can just respond to any specific query. You cannot directly give the biodata for making your promotions. So here, yes, Mr. P will be guilty for professional misconduct under clause 6 part 1 first schedule because handing over the biodata to promote the firm or partner's achievement indirectly solicits professional work. Okay, yes sir. Let's do question number 4. What it is asking, sir? Later there was another partner, Mr. Q, who had published a congratulatory advertisement in a leading newspaper with his photograph on the occasion of opening a new office. Can we post such photographs and on the newspaper, sir? We can post a small advertisement about. We can just mention the facts about it, but we cannot post the new photograph. We cannot just post our photograph in the leading newspaper. So it is definitely a violation. It is definitely will be guilty. It is not permissible because it is indirectly soliciting professional work and promoting the partner in the firm, and it will be tantamounting to your professional misconduct. Okay, yes sir, this was your question number 4 and this was your case scenario number 24. Let's do question number 25. What does it say, sir? So here, let's do question number 1. I guess it is question number 1. Question number 1 is over here, I guess. Let's see. So basically, yes. So basically it is trying to ask us at which have been wrongly included or excluded from the computation of DTL. So we are computing DTL and which have been wrongly included or excluded, you have to tell that. So basically they are saying that they have included amount received in INR for disposal of import bill shown under sundry credit deposits. No sir, these are not to be included, these are to be excluded. Okay, yes sir. Next, they have included net credit balance of branch adjustment account. This is to be included. This is correct. Next, they have excluded amount received from ECGC by invoking the guarantee. This is to be excluded. This is correct. Next, they have included margins held and kept in sundry deposits for funded facilities. No sir, this is not to be included. This is to be excluded. Next, they have included unaccounted inward remittances received on behalf of customers. That is also correct. So serial number 1 and 4 are incorrect. Okay, yes sir. So here serial number 1 and 4 are incorrect. Next is question number 2. During the course of audit, this Verma and company has observed one large advance account of bank that had no recovery of principal or interest for the past 18 months. For the past 18 months, they haven't recovered the principal or interest. The bank has not applied NPA norms as well as income recognition norms. They have not classified as NPA and they are continue charging the interest income based on accrual only. Okay, yes sir. When queried, the bank management replied that this was guaranteed by central government and hence these norms were not applicable and bank has not invoked the guarantee. Arey mere bhai, arey mere bete, if the central government has guaranteed any advances, then it will be classified as NPA. Sorry. for income recognition purposes. For income recognition purposes, that will be classified as NPA, but for asset classification purposes, that will not be classified as NPA. So here bank is only partially correct for not classifying as NPA, but bank has to classify as NPA as an income recognition perspective. So here it is said that the bank is correct in not classifying the advance and NPA for provisioning purposes, since it was central government guaranteed, but interest income should not be recognized unless it is realized. Okay, yes sir. Here, okay, in this particular case, I will also be telling you where ICI have done some mistakes, and also where the case studies are repeated. In this 60 case studies also, ICI has repeated a few case studies in this 60 case studies itself. Okay, yes sir. So we will be marking that case studies as well. So here what I am saying is, so correct option is B, and ICI has also given the correct option. The explanation of the correct option is bilkul is very correct, but here ICI has mistakenly typed it as option number D. However, it is option number B which is correct. Okay, yes sir. Just you can correct it from your case scenario digest that you are referring to. Okay, or you can directly print this case scenario booklet that I will be sharing in the Telegram channel. Okay, yes sir. Next is what, sir? Next is saying that would the auditor's conclusion change if the advance which has remained overdue for more than 18 months was guaranteed by state government instead of central government? Yes sir. If it was guaranteed by state government, then it will be considered NPA for provisioning as well as income recognition purposes, because the state government guaranteed advances does not have any special exemption. Okay, yes sir. Chaliye. Next is question number 4. It says that additionally Mr. Verma and company was offered stock audit of a sister concern of a Quick Trust Bank Limited for the financial year 23-24. So basically we are doing the Quick Trust Bank Limited audit for 23-24, and for a sister concern of Quick Bank Limited we are offered a stock audit. Can we do, sir? No, we cannot do it. The branch audit of its Andheri branch for financial year 23-24, can we do it, sir? No sir, and we cannot do it. And Bandra branch for financial year 22-24-25, can we do it for next year? Yes, we can do it for next year. So basically if we are the statutory auditor of the bank, we cannot do the internal assignments of the bank or the sister concerns of the same bank for the same financial year, but obviously we can do it for the next financial year. So here what we can accept, sir, we can accept the stock audit assignment of Bandra branch only, since it is of the next financial year. Okay, yes sir, this was your case scenario number 25. Let's do case scenario number 26. What does it say, sir? It says that though the company had significant growth in the past year, we have not done well in the last 2 financial year. Now as per SA 570, there are certain events or conditions that individually or collectively make a significant doubt on entity's ability to continue as going concern. Now when we are assessing whether Minsan Limited is going concern or not, which of the following audit procedures should not be performed? Should not be performed. Okay, yes. First is we need to analyze and discuss with the management of the company to find out whether the installation of the new plant and machinery that they are going to do would enable the company to reduce the cost of production. Yes, we need to evaluate the future plans and the feasibility of these plans. First is this is correct. Next, we need to inquire the company's legal counsel regarding whether there was any legal litigation or the claim against the company. What is the reasonableness of the management assessment, and what is the estimate of their financial implication? Yes, we have to do that so that we know whether there was any legal litigation or claim that can seriously impact the going concern assessment. Next, we need to evaluate management's future plan and strategy to increase the market share of product. Yes, we need to do that so that we know whether the management has any future plans or not. And lastly, we need to do analysis and discuss with the company cash flow and profit of the previous year with the projected accounts. No, sir, we do not have to evaluate the previous year cash flow and project profits. We need to evaluate the cash flow forecast, not the previous year cash flow and profit. So this particular additional procedure is not to be done while performing procedures on going concern. Okay, yes. Next, company has made an estimate for allowance of doubtful debtor at 5%. Okay, we have made a provision for doubtful debtor 5%. Some financial statements item cannot be measured precisely but can only be estimated. Obviously, provision can only be estimated. The nature and reliability of information available to management to support the making of an accounting estimate varies widely, which thereby affects the degree of estimation uncertainty associated with the accounting estimate. You can just ignore whatever is being said over here. You just have to listen that please advise which among the following may have higher estimation uncertainty and higher risk as per SA 540. We discussed two type of accounting estimate in SA 540. One was which having the lower estimation uncertainty, and one was which was having higher estimation uncertainty. So we have to identify which is having higher estimation uncertainty. First is estimates which are made for accounting inventory obsolescence that are frequently made and updated. Frequently made and updated do not have any higher estimation uncertainty. A model used to measure the accounting estimate that is well known and assumptions to the model are observable in the marketplace. Since it is well known, since it is observable in the marketplace, this is not a higher estimation uncertainty. Accounting estimate made for allowance for doubtful debts, where the results of auditor's review of similar accounting estimate made in the prior financial statement do not indicate any substantial difference between original and our actual outcome. So basically, based on our past judgments, there was no substantial difference between the actual outcome and the original accounting estimate, which means that it is carrying low estimation uncertainty. So last, which is having higher estimation uncertainty, sir? Judgment regarding the outcome of pending litigation against the company. Outcome of pending litigation is always having higher estimation uncertainty because we do not know what the court may order. Okay, yes sir. Next, let's do question number 3. What it says there: the company in the notes in the company financial statements disclose that there is a suit against the company with full details. Okay, now based on the audit evidence obtained, we need to draw users attention to the matter that is presented in the financial statements by way of clear additional communication, because there is an uncertainty related to future outcome of the litigation. In this situation, which of the following reporting option would be correct? If the auditor is satisfied that the conclusions reached by the management and the matter is fundamental to the reader of the financial statements. Sir, this is way too much. This is very simple, because it is fundamental to users' understanding of the financial statement. This is already disclosed in the financial statements. And what we will include, sir? We will include an emphasis of matter paragraph in the auditor's report, and we will just refer to the matter that is emphasized and where the disclosures can be found in the financial statements. Okay, yes sir. Next is question number 4. It says that company has got a show cause notice from a state pollution control board as per SF. Okay, the company has got a show cause notice from a state pollution control board. Now, as per SA 250, the auditor shall perform audit procedures to identify any instances of non-compliance with other laws and regulations that may have a material effect on the financial statements. Now, when as an audit team, the company became aware of information when we become aware of any non-compliance with law, what would not be the audit procedure to be performed? So if I get to know about any non-compliance, what would not be the audit procedure to be performed? Okay, first of all, we need to understand the nature of the acts and circumstances which has occurred and obtain further investigation so that we can obtain the possible effect on the auditor and the financial statements. Yes, we have to do it. First is safe. Second, we need to discuss with the management, and if they do not provide any sufficient information and if the effect of non-compliance is to be material, legal advice may be obtained. This is also correct. Next, we need to evaluate the implication of the non-compliance in relation to other aspects of audit, including risk assessment, reliability of written representation, and take appropriate action. This is also the same thing that we discussed in SA 250. But what we do not have to do it, monitoring the legal requirements and compliance with code of conduct and ensuring that the operating procedures are designed to assist the prevention of non-compliance with law and regulation and report accordingly. It is not our responsibility to monitor the legal requirements. It is management's responsibility to monitor the legal requirements. We have to check as an auditor whether the management has complied with the legal requirements or not. So monitoring is the responsibility of management, not of the auditor. Okay, yes sir, this we have specifically discussed in SA 250. Okay, yes sir. Now here there was a total loan sanction, where there was a loan sanction for new plant and machinery. Out of the total loan sanction, 20 lakh was specifically asked for purchase of a machinery oil extractor. But we haven't purchased oil extractor. What do we do with 20 lakh, 5 lakh amount, sir? We purchase an improved model of the machinery, which is oil extractor with dryer. Okay, now what will be the reporting option? So basically we know that whenever we have taken the loan as per clause 9 of CARO 2020, if we have not applied the loan for the purposes which we have taken for, then we need to report it in the CARO 2020. Here we have taken the loan for oil extractor, but we have applied the loan for oil extractor with dryer. Can it be called a non-compliance with the purposes of the loan? No, sir. Because the purpose of the loan was to purchase an oil extractor, and we have purchased oil extractor, but an improved model. So it is perfectly complying with the purposes of the loan. So here we will state in the CARO report that the term loan has been applied for the purposes for which it was sanctioned. There is no discrepancy. Okay. Yes, sir. This was your this was your clause number 26. Case scenario number 26. Let's do now case scenario number 27. I think I need to take a break. Let's do case scenario number 27. So it says that question number 1, ABC Enterprises is a company that has obtained license from central government to promote cricket in rural areas of India, which means it is a section 8 company. Now on the section 8 company, is CARO applicable, sir? Yes, CARO is not applicable to ABC Enterprises, and the issues not to be reported. We do not need to report any issue that is we have found in CARO, since the CARO is not applicable in this particular company. We have already discussed that the CARO is not applicable on one person who is obtaining insurance borrowings from a bank for his small iPhone 8. Section number 8 company car is not applicable. Okay, yes sir. Let's do question number 2. Now what this question number 2 says, first of all we have to identify the interest income that we need to take it an NPA. Okay, let me see what is the question. What is the total amount of loans that should be classified as NPA? Perfect. Okay, so here there is 59 agricultural loans that is guaranteed by government of Uttar Pradesh, means it is a state government guaranteed advance of 29 lakh that were overdue for more than 2 years. Then 29 lakh will be treated as NPA. Second, 73 agricultural loans guaranteed by government of India, means state central government, 25 lakh overdue for more than 2 years. Can it be considered NPA? No sir, so it will not be considered NPA. Next, there are 6 corporate loans account guaranteed 3 each by government of India and government of Uttar Pradesh amounting to 25 lakh each. So 3 corporate accounts will be classified as NPA since they were guaranteed by the state government, and central government guaranteed advances will not be classified as NPA. So 3 into 25, that will be 75 lakh. 75 plus 29 will be 104 lakh. So 104 lakh will be your NPA. Okay, yes sir. Which of the following must be reported as a contingent liability for bank limited? So in a bank, what is a contingent liability? A percentage of total bills purchased by ST Bank. No, it is not a contingent liability. Secondly, claims against the bank acknowledged as debt. If you acknowledge is a debt, then it is a liability, not a contingent liability. Not acknowledged as debt is your contingent liability. Next, unpaid salaries of 6 lakh to 6 employees of ST Bank who are currently involved in a court trial. Now this is not a contingent liability. Lastly, guarantees given by ST Bank on behalf of constituents located in Nepal. This is a contingent liability. Example of a contingent liability we have already discussed from the concept book. Okay, yes sir. Next, as per SA 701, what are the matters that are used in determining the key audit matter? First is the effect of significant transaction that took place during the year. First of all, obviously significant transaction is used, so it is first one is correct. Next, areas of higher assessed risk are reported by management experts. No sir, areas of higher risk reported by auditor. Okay, so this is not used. Significant auditor judgment related to significant management judgment. Yes, that this is also used. First and third are the answer. Okay, yes sir, this was your question number 27. Let's do question number 28. What does it say sir? Question number 28. It says whether the act of conducting joint training session on GST by Love and Kush and sharing of fee collected leads to a professional misconduct. No, as per ASB Ethical Standard Board decision, you can do joint training sessions and you can share the fees as well. Okay, yes sir. So as per each and decisions, they can do everything and they will not be held guilty. Second, with respect to BRSR reporting on the data of total emissions and future energy consumption plan of the company, how do you treat them sir? We have already discussed in the previous MCQs that total emissions is part of your essential indicator, and your energy consumption, future energy consumption plan is part of your leadership indicator. That is an optional disclosure. Okay, yes sir. The futuristic plan which the company has for its energy consumption can be categorized under which principle of a BRSR? So if you have a future energy consumption plan, which means you are thinking about environment, which means it will be principle number 6, protection and restoration of environment. Okay, yes sir. You have accepted the offer to become a member of the board of management of KYC Cooperative Bank. Do you think CA Love would be held guilty of professional misconduct? No sir, we know as per ESB decisions it is permissible for a CA in practice to be member of board of management in primary cooperative urban banks. Okay, yes sir. So there will be no professional misconduct in this particular case. Okay, in the given case it is mentioned that CA Kush is practicing CA and it is also engaged as an equity research advisor. Do you think we will be guilty? No sir, we can be an equity research advisor as per ethical standard board, but we cannot publish retail reports. Okay, yes sir. So if we are not publishing any retail reports, then we will not be guilty of professional misconduct. Okay, yes sir. This was your case scenario number 28. Now let's do case scenario number 29. What it says sir, with respect to there was a non-consolidation of the financial statements of Sokol Limited. Oh my god, you haven't prepared the consolidated financial statements. How we should deal in the auditor report sir? This is a very material misstatement and also pervasive as well, since the financial statements were not made. So we will give adverse opinion because its impact is material and pervasive in auditor's report. Okay, yes. Secondly, with respect to corresponding figures of the previous year, there was a corresponding figures in the previous year in the current year financial statements. What are the auditors reporting responsibility for the same? We do not have to report on the corresponding figures unless in the previous audit period there is other than a qualified or unqualified opinion, means in the previous period there is a qualified opinion or the auditor has sufficient appropriate audit evidence that there is a material misstatement in the financial statements of prior period which was not addressed earlier, which means there was an unmodified opinion in the prior period and in the current period we are able to find a material misstatement in prior period, then we will need to refer the corresponding figures in our auditor's report. Okay, yes. Next is what is the reporting responsibility of auditor in case of prior period financial statements were not audited? If prior period financial statements were not audited, then we need to report such matters in CAM. False. We need to report such matters in other matter paragraph. Perfect. Secondly, we will be responsible for obtaining sufficient and appropriate audit evidence that opening balances does not contain any material misstatement. This is as per SF 510, and this is also correct. So both B and C are correct. Okay, yes sir. Next, we are preparing the financial statements as per applicable financial reporting framework, and this is the responsibility of management of Delco Limited. Now, which of the following is correct regard to disclosure of such management responsibility? So where we disclose the management responsibility? In the management responsibility section. So it says that the auditor will describe the management responsibility in the responsibility of management for financial statement section. Okay, yes sir. Next, if the auditors of this company decided to give qualified adverse opinion in the current financial year with respect to non-consolidation of the financial statements of Soccer, means we are planning to give modified opinion. Which of the following is true with regard to use of EOM paragraph for some other matter? So if we are planning to use qualified adverse opinion for this particular matter, can I give EOM paragraph for any other matter? Yes. EOM paragraph cannot be given for the same matter for which you have to give modification of opinion. But if you want to give EOM paragraph for any other matter, you can give. There is no restriction. So paragraph on a matter can be added if auditor's opinion is not qualified or adverse in respect of that particular matter, and the matter is fundamental to user's understanding of the financial statements. Okay, yes sir. Next is what sir? It says if the management is disclosing the fact of non-consolidation of financial statements of Soccer Limited in the notes to account, what will be the impact on audit report? Now, suppose management has not done the consolidation of financial statements, and management is saying I will disclose about this fact in my financial statements. So will it have any impact on my opinion? No sir, it will not have any impact on my opinion. I will issue modified opinion even in this case as well, because you have not consolidated the financial statements, irrespective of the fact that whether you have disclosed it in the financial statements or not. Okay, yes sir. So the disclosure notes to account is the responsibility of management preparing the financial statements. It will not impact our auditor's opinion in this case. Okay, yes sir. This was your case scenario number 20 or 29. Now let's do case scenario number 30. What does it say sir? It says that there is Mystery and Associates who were appointed for stock audit by the audit committee for 10 branches. Okay, so whether Mystery and Associates are authorized to accept the appointment as statutory auditors of the same branches? No sir. The statutory auditors of the bank cannot do internal audit assignments of the bank. So no, Mystery and Associates cannot accept the appointment, as audit firms should not undertake statutory audit assignment when they are associated with internal assignments of the same bank for the same financial year. Okay, yes sir. Second, whether the bank management is authorized to appoint and fix the remuneration of the statutory auditors without consulting the audit committee of the board of directors or the members in AGM? No sir, you cannot appoint the auditor, you cannot fix the remuneration of the statutory auditor unless it is approved by a resolution in the AGM of the bank. Since you are a banking company, so you will have to take the approval of the members of the company in AGM. Okay, yes sir. Next, you are asked by your senior to verify the high value cash deposits at Kerala branch. Now what are the parameters or what are the documents you will verify as the concurrent auditor of the branch? Okay, for checking the high value cash deposit, what we will verify? First, it is that we will verify the details of cash remittance to currency chest only. We will verify this, but not just this. Second, you need to verify the KYC documents of customers and the reason for high value cash deposit in the account, like nature of business or sale of property. We need to verify this as well. Next, as a concurrent auditor, you need to verify the reason for regular cash deposit in the accounts and the nature of discrepancies, if any, found in cash deposited by the customers. This is also correct. So we have to perform all these procedures, all these three procedures. We need to verify the documents, KYC documents. We need to verify the reason for high value cash sale. We need to verify the discrepancy found, and we need to ensure that the records of currency chest remittance are maintained properly. Okay, yes sir, we have to perform everything, so you should read all the options correctly. Okay, yes sir. Next, how with the discrepancy? So say was a discrepancy that whatever currency chest remittance that we made in the financial year, where the intimation of the cash remittances were not preserved. Now how this discrepancy should be dealt by the concurrent auditor? Should we modify our opinion because of this discrepancy? No sir, this is not that discrepancy to modify our opinion. We shall need to discuss the importance of preserving the hard or soft copy of the email that we have sent for cash remittance with the branch manager, and since we have discussed the importance, we have told them that you should maintain the remittance. We will check it for its compliance in the next audit period. So whenever I am auditing next time, I will check for its compliance whether they have maintained the intimation this time or not. Okay, yes sir, this were your case scenario number 30. So we have discussed all the 30 case scenario. 50% of the case scenario booklet is already done. Now we are starting with your case scenario number 31, and if you have still not liked it, you are doing wrong with yourself and with me as well. So please like the video to motivate me to put more videos something like this. Okay, yes sir, let's do case scenario number 31. What it says, sir? Let's do question number 1. It says that one day the CEO of the company, CFO of the company, received a video call from the managing director in which the managing director instructed him to transfer 90 lakh to the bank account of NXT Limited, and this was obviously a cyber attack. And now they will be asking us which type of cyber attack it is. Now we are impersonating as a someone, and when we are impersonating as someone, which type of cyber attack it is? It is spoofing. Okay, yes sir. So here spoofing will be the answer. Okay, yes. See, next, second is, after completion of the necessary procedures, we felt that we had incurred additional efforts to the tune of 20%. So in this particular matter, in this particular area, we have incurred our time and efforts of 20% of the total audit, which means we have incurred significant time and efforts on this particular matter. So it will be classified as key audit matter, since we have incurred significant time and efforts. So we are confused whether to report the impact by the cyber attack instance. On the cyber attack instance, we incurred our time and efforts of 20%. So what is the appropriate reporting implication, sir? We need to report it as a key audit matter, since the cyber incident was of the most significance in audit of financial statements of current period. Okay, yes sir. Next, the company want to prepare an integrated report that is contained in International Integrated Reporting Council and endorsed by SEBI. Is the company secretary of the view that integrated report is mandatory for listed entity? No sir, integrated report is voluntary for top 500 listed entity. Okay, yes sir. So view of company secretary is incorrect. Okay, next, integrated reporting comprises 6 capital. Company observed that is capitalized intangible assets. Patent comes under which type of capital, sir? It is intellectual capital. Second is rooftop solar equipment. So although you may consider it as a manufactured capital, but it is because of the input of nature, that is solar energy. So that is, it is called natural capital. So here it will be intellectual capital and natural capital. Okay, yes sir. Can the auditor accept the system audit as offered by Comtech Limited? So I am doing the statutory audit of Comtech Limited, and the Comtech Limited has told me to do system audit. Can I accept that? Yes, I can accept that. There is no limitation on me accepting system audit. So yes, we can accept the system audit, provided in the system audit we are not required to review of financial data and information, because that will be covered in our statutory audit. Okay, yes sir. This was your case scenario number 31. Let's do case scenario number 32. It says interest income. So what are the interest income that we need to take to the P&L? First is the 5 lakh interest income relating to a short-term crop loan where installment was overdue for 1 crop season. But in short-term crop loan, if the installment is overdue for more than 2 crop season, then it will be NPA. Here it is not an NPA. So 5 lakh income will be taken to interest income. Next, 7 lakh relating to an advance that is equally granted by Government of India and Government of Tamil Nadu, where the installment was due for more than 6 months. Now in case of central government, state government guaranteed advances, if the overdue is for more than 90 days, then it is considered as NPA for income recognition purposes. So this income will not be taken. Next, the 25-month-old NPA account worth 43 lakh was sold to an asset. So basically it is an NPA, not a interest income. So 5 lakh will be taken as an interest income. Okay, yes sir. So yeah, 5 lakh will be taken as an interest income in the financial statements. Next, it is asking what could be the possible amount classified as NPA. So which amount we will be classifying as NPA? Will be classifying the 5 lakh short-term crop loan interest that is overdue for 1 crop season? No sir. Next is 7 lakh are there, but 7 lakh is equally granted by central government and state government, and for classification purposes we do not count the central government guaranteed advances. So we will count the state government guaranteed advances. So 7 divided by 2 will be 3.5. So 3.5 will be classified as NPA. Okay, yes sir. Next, in NPA, the sales to asset reconstruction company, what discrepancy auditor might have noticed? So here what they have done is, there is an NPA of 43 lakh, the net book value is 43 lakh, and we have sold it for 45 lakh. So there is a profit of 2 lakh, and they have credited the profit to the profit and loss account. Should we credit the profit to the profit and loss account? No sir, the profit and loss, we should not credit the profit and loss account. We should credit the provision for loss in sale of value of old other assets. So when we are saying other and selling other NPAs, if there is a loss, then we can set off this particular profit from that loss. Okay, so we cannot directly credit to the P&L account. Okay, yes sir. Next, among the services to be provided to startup company, provided which services would not lead to violation of CA Act. So we are providing some services to startup company, which services will not lead to violation. Okay, yes sir. So which are allowed basically? Setting up executive incentive incentive plan and wage incentive plan. Yes, they can do it. This is covered under MCS. Next, price fixation and other management decision making. Yes, you can do it. I'm covered under the MCS. Next, conduct a periodical audit and advisor for tax matter. No, you cannot do it because it is not covered under MCS. Okay, so first and 2 can be done by can be provided to the startup. Okay, yes sir. Next it was sir. Next it is what? Case scenario number 33. What it is saying, sir? Case scenario number 33. This is question number 2. Question number 1. Yeah. Accordingly, we proposed to withdraw from the engagement after consulting with the senior partner of the firm, and we wanted to withdraw on 15th November. Now, if we are withdrawing on 15th November, what kind of how many reports we need to issue? You need to check here, sir. The previous quarter end date was 30th September, 31 days of October, and 15 days of November, which goes for 46 days, which means we are withdrawing after 45 days from the end of the quarter, which means we will have to issue the limited review report for this quarter and for 31st December as well. And once we have issued the limited review report for 3 quarters, then we will have to issue the limited review report for 4th quarter as well, which means I will have to issue the limited review report for 3 quarter as well as the 4th quarter. So here it says we need to issue the review report for audit report for full quarter as well. Okay. Now, what was the responsibility of Mr. Kamal when the management refused to remove the said limitation? So, Mr. Kamal noticed that those charged with governance in the company are also involved in managing the entity, which means TCWG and management are same. Now, if the company is not, if the management is refusing to remove any limitation, do I need to first communicate to TCWG? No. Why? Because TCWG are involved in managing the entity. So, we do not need to communicate to TCWG separately. We will directly determine whether it is possible to perform alternative procedures to obtain sufficient and appropriate audit evidence. We will not have to communicate the matter to TCWG. Okay. Yes, sir. Next, if we are proposed to resign on 14th November, then what will be the responsibility of auditor with respect to withdrawal? If on 14th November we wanted to resign, that means it is within 45 days from the end of the quarter. Then we will just have to issue the limited review report of second quarter, and we'll just have to mention or inform the before withdrawing. We need to inform the TCWG regarding any of the matter due to which we would have modified our misstatements, and we need to issue the limited review report for second quarter. Okay. Yes. Next, whether in the given circumstances withdrawal from engagement was mandatory, and what is the responsibility of responsibility of auditor with respect to such withdrawal? Whether the withdrawal was necessary, because yes, withdrawal was necessary because there was a scope limitation. In the given circumstances, yes, it was mandatory. And in case of withdrawal, as the withdrawal is before issuing the auditor's report, was not practicable or possible, therefore we will need to issue disclaimer of opinion, because we wanted to withdraw on 15 November, but we will have to issue limited review report for third and audit report for fourth quarter, so it was not practicable to withdraw, so we will have to disclaimer opinion on the financial statements. Okay. Yes, sir. Last question is question number 5, that is, assuming the Opus Chemicals to be an unlisted company, whether the reason for resignation given by NLP company was appropriate. So what is the reason that we have given? We have given the reason as professional preoccupation. Now, whether the company is listed company, unlisted company, we cannot give the reason as professional preoccupation. You will need to give the clear reasons for your resignation. So here, no, the auditor should have clearly mentioned the reasons for resignation in the legislation letter issued to the company. It doesn't matter whether the company is listed or unlisted. Okay. Yes, sir. This was your case scenario number 33. Let's do case scenario number 34. This is repeated. We have already discussed this case scenario earlier. Let's quickly revise all the topics what we have discussed. So here they are saying that RST Limited should adhere to the opinion formulated by Island Company and ABSN Company or explore alternative option. Obviously, we can explore alternative options. We just do not need to adhere to any of the opinions that is given by joint directors. Okay, joint auditors. So we are at discussion to issue distinct audit report independently. In such a scenario, we need to refer to the other audit report in other matter paragraph. This was not discussed earlier. Okay, this particular MCQ was not discussed earlier. Second is, in the above given case, what should be the next course of action on part of auditors when the auditor conclude that the reason for management refusal to allow the confirmation request is unreasonable and auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedures. So basically, it is talking about what, sir? It is talking about our SA 580. Oh, sorry, SA 505, that we are not allowed to send the confirmation request. Then we need to communicate the matter to TCWG and also determine the implication for audit opinion as per SA 705. Okay. Yes, sir. Chaliye. Next, what we have to discuss, sir? Next, what we have to discuss, the third point, that the auditor of RJ Private Limited mentioned the fact in our financial statements the prior period were audited by another auditor. The prior period were audited by another auditor. In which para we have to mention this particular thing? In other matter paragraph as per SA 710. Okay. Yes, sir. Fourth is what, sir? In the above given case, what should be the source of action on the part of HKJN company when they found material misstatement has not been accurately presented or disclosed in the financial statements of the current year. So there was a material misstatement in the previous period, but it was not accounted or disclosed in the financial statements of the current period. Now what we should do, sir? We should express qualified opinion or adverse opinion as appropriate under as per SA 705. Okay. Yes, sir. Lastly, in context of aforementioned case scenario, thus Caro 2020 applied to RJ Private Limited and associate company of JMP Limited. So here this Caro 2020 is applicable. We are what, sir? We are a private company. Okay, we are the associate company of a public company. That is not nowhere covered in the Caro applicability. Now here if you see, paid up share capital and capital credit balance of profit and loss account is given separately, which means ICA wants us to check paid up capital limit separately, which means ICA wants us to check the small company limit. So here paid up share capital is what, less than 4 crore, turnover is what, less than 40 crore. So here it will be small company, so Caro will not be applicable. So what about the new limits of 10 crore and 100 crore? ICA hasn't notified it yet. Whenever the ICA will notify, we will consider, but until now we have to consider 4 and 40 crore only. I don't think this is repeated. I think there's something mistake over here. This is not repeated. Okay, yes sir. So here the Caro 2020 does not apply as a paid up share capital does not exceed 4 crore and turnover does not exceed 40 crore. Okay, yes sir. Chaliye. This we have case scenario 34 is done. Let's discuss case scenario number 35. What is case scenario number 35? Question number 3-2 we have to discuss from above. Okay. So company has requested its previous auditor to give back its audit documentation and want the previous auditor with legal notice to submit back to the company showing the confidentiality clause. Company says that now confidentiality is available. You are the previous auditor and you have our audit documentation, so you should give back the audit documentation. Is the auditor liable to give back the audit documentation? No sir, because audit documentation is a property of the auditor. He is the owner of the work papers and he may at his discretion make available the working papers of the company. It is his discretion. Company cannot force him. Okay, yes sir. Next is what, sir? There is a Prism Limited who is required to appoint the internal auditor and the company has employed the internal auditor. Delegated the duties of internal auditor to an employee who has just joined the company as a first year architect. The internal auditor is just a first year architect and the audit team is planning to use the work performed by the internal auditor as the reports given by him are designed in marvelous fashion. Since he is an architect, so he has designed the reports in a very good fashion. Even the board of directors are astonished by the design of the internal audit report. So that's why we are considering to use the work of internal auditor. Now, the engagement partner has requested us to comment upon the usage of work of internal auditor by the engagement team as per essays. Sir, the internal auditor is just a first year architect. He does not know anything about internal audit. So how we can use the work of that particular internal auditor? It doesn't matter about the marvelous fashion of the report. So here it says the auditor is required to assess the competence and professional care of the work performed by internal auditor. And here the first year architect is not competent and professionally experienced to perform the work of internal auditor. Thus, we should reconsider the audit strategy and we should not use the work of internal auditor. Okay, yes sir. So here what has happened, sir? Here it is very good in case they have given that the company that we as a company have incorporated another company, Steelex Private Limited, by investing 45% in the share capital of the company. So by 45%, I am not the other company is not my subsidiary, but we are having 100% control over the board of directors as per the agreement with the majority shareholder. So now we are controlling the composition of board of directors, which means indirectly it is a subsidiary of our company. So we will have to prepare the consolidated financial statements by including that other company as a subsidiary of our company. Okay, yes sir. This particular company is listed in USA, but it is in process of listing of Indian stock exchange and net worth is 280 crore. Viraj promotes the product as its product brand ambassador. Nothing concerned about this, but yeah, one thing is concerning that it is a subsidiary company. So what it says, sir, the trainee has asked whether the team is required to perform any procedures for investment in Steelex Private Limited. Obviously we will have to perform procedures in Steelex Private Limited because it is a subsidiary. We will have to prepare consolidated financial statements. So it says that the company need to prepare the consolidated financial statements and the same need to be audited by the auditor, and the auditor needs to consider the financial information and also assess regarding the need to use the work of competent auditor. This is perfectly correct. We have to prepare the CFS. First is correct. Second, auditor needs to perform audit procedures on investment balances and transaction with the related party. It is a subsidiary, so it is a related party. We need to perform procedures on transaction with related party. This is also correct. Next, the auditor need not perform any procedures as investment was already made in the previous year. No sir, the investment was not made in previous year. The investment is made in current year, so we need to perform all these procedures. So both A and B will be correct. Okay, yes sir. Next is what the trainee asked about the role of auditor in case the investment in Steelex Private Limited is increased to 60% in the next year. So previously we were holding 45%, but previously itself it was our subsidiary and previously itself we prepared the CFS. Now it is saying what is the role of auditor if we increase the investment from 45% to 60%. First of all, the auditor should also audit the group consolidated financial statements as the consolidation becomes applicable for the company, being the investment is rate from 45% to 60%. So here it's saying that this year the group consolidated financial statements will be prepared. So you will audit group consolidated financial statements. No sir, you are wrong, that the group consolidated financial financial statements were prepared in earlier years as well. So this is not an additional procedure to be performed. Secondly, the auditor needs to audit the subsidiaries books of accounts to get confirmed over the balances in the material subsidiary. Thus audit strategy will change for verifying the investment. Do we have to audit the subsidiary mandatorily? No sir, we can hire a different auditor for auditing the subsidiary. We don't have to ourselves individually verify the subsidiaries books of accounts. Okay, yes sir. Third is, the auditor can either on its own audit the subsidiary or use the work of another auditor to get comfort over the balances in the subsidiary from the next year. No sir, this is our subsidiary from the previous year itself, so we could have done the same thing from the previous year itself. Okay, yes sir. So what we have to do in the current year, we need not do any additional procedures, just we need to perform audit procedures over the increase in investment value 45% to 60% and its disclosure in the financial statements. Obviously we would have included that disclosure in the financial statements, that it is increased from 45% to 60%. We just need to perform our procedures on those disclosures only. Okay, yes sir. Let's do case scenario number 36. Case scenario number 35 is already done. Okay, so here it's saying, kindly guide Mr. Rajan regarding areas where he may need to report in absence of internal audit function in company audit report. So if there is no internal audit function in the company, where we need to report the same sir? We need to report under clause 14 of CARO 2020 that there is no internal audit function in the company. Okay, yes sir. Next, Mr. Rajan reported under clause 3A3 of the master direction NBFC auditors report direction RB directions 2016 that this company NBFC is not eligible to hold its certificate of registration as during the year the net owned funds went below the minimum required limit. So basically we are saying that they are not required, they are not eligible to hold the certificate of registration as during the year the net owned funds falls below the limit. But the management of that NBFC is saying that this certificate is pertaining to the net owned fund position as on the 31st March of the year, and it is not to be seen during the year. You will have to say who is saying right sir. Here management is saying right that every NBFC shall submit a certificate from the statutory auditor that they are eligible to hold a certificate of registration under 45 RB of RBI Act, and this certificate shall be based on the financial position of the company as at the year ended 31st March. You don't have to check during the year whether they are complying with the net owned fund requirement or not. We will have to check on the 31st March whether they are complying with the requirements of the 31st March of NF or not. Okay, yes sir. Next, Mr. Rajan wanted to highlight the matter with respect to absence of internal audit function in his audit report under emphasis on matter paragraph. We thought, okay, we shall highlight this particular matter of internal audit, absence of internal audit function in our emphasis on matter paragraph. But in the financial statements, it will not be disclosed. In the financial statements, nothing will be mentioned about internal audit function. Our manager said that the audit part was not right disclosing the same matter in the audit report because it is an internal matter and we did not identify any material evidence that could impact the auditor opinion. So kindly guide Mr. Rajan whether proposing an internal action emphasis on matter paragraph is correct or not. No sir, EOM is referred to those matters that are presently or disclosed in the financial statements that are of importance to users' understanding of the financial statements. Hence reporting under EOM is incorrect. We don't told them that reporting under OM is correct, but we are saying that reporting under EOM is incorrect. Okay, yes sir. This was your case scenario number 36. Let's do case scenario number 37. What does it say, sir? Question number 1. Later on, CA Taran posted his framed photograph on his website wherein he was receiving the SAID award from the institute. Can we post our framed photograph on the website, sir? No, we cannot post. If we post, then we will be guilty under clause 6 part 1 first schedule. Okay, yes sir. Second is what, sir? Second is saying that MSK partners sought direct assistance from CAIA internal auditors about in the said in the above scenario, advise whether we are permitted to do so as per relevant essay. So we have sought direct evidence from the direct assistance from the internal auditors for 3 matters. Let's see whether it is allowed or not. First of all, regarding evaluating significant accounting estimates, no sir, we have to do it ourselves, so we cannot ask for direct assistance. Secondly, for assessing the risk of material misstatement, no sir, we have to do it ourselves, we cannot ask from the internal auditor. But internal auditor can assist the partner in assembling the information necessary to resolve exception in confirmation responses. For just assembling the information for clerical work, we can use internal auditors, that is of no doubt. Okay, yes sir. Next it is what, sir? So basically there is a cooperative society that has come to us for auditing them, and they are offering fees either to charge fees as a percentage of net profits or to charge fees of 501. Can we charge fees based on percentage of profits? No sir, but exception if it is for cooperative society. So either of the two I can accept the fees in. So we can either choose one or either choose two. Okay, yes sir. Next, before signing the tax audit report, we sent a registered post to the previous auditor and obtained the postal acknowledgement. Will we be held guilty of professional misconduct? Yes sir. First of all, it should not be before signing the tax audit report. It should be before accepting the tax audit engagement. You should communicate to you should communicate to the previous auditor, and not just for by obtaining the postal acknowledgement. You should either communicate to registered post acknowledgement due. So here, as per clause 8 part 1 first schedule, CM Manik will be held guilty of professional misconduct because he had accepted the tax audit without first communicating with the previous auditor in writing. Okay, yes sir, this was your case scenario number 37. Let's do case scenario number 38. It says that the company that currently we have 19 companies for which we are handling tax audit. At the beginning of the current financial year, we were approached by 14 new clients for tax audit assignment, and we are proprietor. So can we accept 40 tax audit assignments? Yes, we can accept, because 19 plus 40 comes to about 59, and we can accept total 60. So yes, we can accept all of the 40. So in the given case scenario, Govil has breached the maximum number of clients. No sir, he has not breached. He will not be guilty of professional misconduct. In the above case, maximum similarly is 60, and the existing and new clients handled by the Govil is below the prescribed limit. So therefore, he will not be held guilty. Next, will the retaliating act of Chandan against the company make him guilty of professional misconduct? So here, what has Chandan done, sir? Chandan has just maintained the lien over the books of accounts of company because the company were not paying the fees of Chandan. Can Chandan do that? No sir. As per recent ethical board of decision, a chartered accountant cannot exercise lien over the client documents or records for non-payments of his fees. So yes, here Chandan will be guilty. Okay, yes sir. Next is what, sir? So here what has happened, there is two what do we say, visiting cards. So here I mentioned the firm name, the name of the partner, the chartered accountant, CPA Ireland. Is CPA Ireland allowed to be mentioned? Yes, it is allowed to be mentioned. Can we mention just CPA? No, it is not allowed. CPA Ireland is allowed. Partner, correct, these are all correct. Next, there is name and insolvency professional. Is insolvency professional allowed in visiting card? Yes, it is allowed. So both the visiting card are truly correct. There is nothing discrepancy over here. So here we will say there is no information contained in both the visiting card which leads to any professional misconduct. All the details that are mentioned are as per clause 7 part 1 first schedule. Okay, yes sir. Next is what, sir? We have received the following assignments, and we need to say what are the assignments that we can accept. First of all, concurrent audit for TT Bank, we can accept, no doubt about it. Second, statutory audit for HBT Bank, which is not sponsored by TT Bank, which means they are both not interrelated. So we can accept the statutory audit as well. Offer to act as settler of JJ charitable trust. Can we accept the offer to be a settler of the trust? Yeah, yes, we can accept. So this is also allowed. Internal audit of PF trust of government company limited. Can we accept internal auditor of PF trust of government company? Yes, we can accept. Then statutory auditor of government company limited. So same government company. Can I be the same government company statutory auditor and internal auditor of PF trust? No sir, I can either accept any of the two. I cannot accept both. So 1, 2, 3 I can accept, and either 4 or 5 I will have to accept. Okay, yes sir, this was your case scenario number 38. Look at over here, we have already done 38 case scenarios. Let's do case scenario number 39. What does it say, sir? It is saying whether the selection of EQCR is as per the requirements of SQC1. So here in the EQCR, what has happened, sir? EQCR is selected by the engagement partner, and secondly, the EQCR has also made the decisions for the engagement team. And now it is asking whether the selection of EQCR is as per the requirements of SQC1 or not. So here it is mentioned no. EQCR objectivities was not maintained since he was selected by the engagement partner, and there was no formal communication with regarding such selection as well. So this was not correct. So this is also correct option. Okay, second option is no, the EQCR objectivity could not be maintained since it was selected by the engagement partner. Same first point. And second point, he also made decisions for the engagement team, therefore his selection was not appropriate. This is a right answer, not this. Why, sir? Because this just cover 1 point regarding the engagement partner, that it was selected by the engagement partner, and this covered 2 points that it was selected by the engagement partner, and he also made decisions about the engagement team. So this is more comprehensive. That's why this is selected as an answer. Otherwise, this is also correct answer. Okay, yes. Let's do question number 2. The reviewer is of the view that the audit opinion or internal controls under section 143I should have been modified as material weakness existed in the comparative information. So if in the comparative information there is a material weakness in the internal control, do we have to modify our opinion on the internal control as per section 143I? Yes, because the restatement of comparative information due to error is a strong indicator that there is a material weakness in internal control, and also the relevant internal controls were not corrected by the end of the year. Therefore, we will have to issue our modified opinion on internal control as per section 143 IE. Okay, yes sir. Next, whether CA Honey should consider the board report or not as per the audit report was already issued. So there is a board report. We have already issued the audit report, but after that we get the board report. Should we have to consider the board report now? Yes, as per SS 720, other information, any other information that is received after the auditor's report is also considered, is also read and considered as per SS 720. So yes, board report should be considered, as since auditor's responsibility in relation to other information is uniform, is same, irrespective whether whether the point of availability, whether it is available before the date of audit report but after the date of audit report. In both the cases our responsibility is same. Okay, yes sir, this was your case scenario number 39. Let's do case scenario number 40, and this is kind of repeated. I'm sure this is repeated. Let's see. So what it is say, sir, it says that there is a doubt on the management representation, and considering the responsibilities to obtain written representation as per relevant essay, select the incorrect option from the following. We have to select the incorrect option. First of all, although written representation provide necessary audit evidence, they do not provide sufficient and appropriate audit evidence regarding the matters which they deal. This is the correct thing. This is not incorrect. Second, in case of identified inconsistencies between one or more written representation, then audit evidence obtained from others. So we consider whether the risk assessment remains appropriate. If not, revise the risk assessment. We need to determine the NT of further audit procedure to respond to the risk. This is also correct. Next, the auditor may have identified significant issues relating to competence, eyes of management or about its commitment to enforcement of these, but concluded that the written representation are nevertheless reliable. In such a case, the sixth significant matter is documented in essay 230. So it says that when you are considering that there is the written representation is reliable, but there was significant matter, so you should include the significant matter as per essay 230. This is also correct. Then what is wrong, sir? The fact that management has provided written representation affect the nature of extent of audit evidence. Yeah, this is wrong, sir. Even if the management has provided a written representation, we will have to obtain all the audit evidences. We will have to perform all the audit procedures when we as the same case that we have not received the written representation. Irrespective of whether written representation is received, we will have to perform all the procedures and I have to obtain all the evidences. So it does not affect the nature or extent. So this is wrong. Okay, yes sir. Next is what, sir? CAV engagement partner in case of audit of AST Limited wants to communicate. He considers necessary to include additional information in the audit report following the second. So basically it's saying that we need to include additional information in the communication with TCWG as per essay 260. Now, which are the matter which are incorrect for communicating to TCWG, which we don't have to communicate to TCWG. First is what's up, when we have concluded that there is an uncorrected material misstatement of other information, we need to communicate to TCWG. Secondly, when auditor considers to necessary to include emphasis or other matter paragraph, we need to communicate to TCWG. When there is a material inconsistency related to going concern as per SA 570, we need to communicate to TCWG. But when there are no CAM as per SA 701, then this matter is not communicated to TCWG. TCWG, please hear, we do not have any CAM. We do not say that's to TCWG, but obviously when we have the CAM, we have to communicate to TCWG. Okay, yes sir, this is also not repeated. I'm not sure what I have done while solving this case scenarios. Maybe I have just got a glimpse of the case scenario that I have solved earlier, and these were the repeated case scenario from the ones that I have solved earlier. Okay, yes sir. Next, in view of Board of Directors of Ved Limited, they have included 8,500 on account of incentives of financial year 21-22 in the financial statements of 23-24 by amending the accounts. Now, CAH shall consider the following procedures, identify the incorrect procedure from the following. So basically, there was a subsequent event, and now the entity has amended the financial statements to include that incentive in the current year financial statements. Now, as per SA 560, which is the incorrect procedure which I don't have to perform. First of all, carry out the audit procedure necessary in the circumstances of the amendment. Obviously, we will have to carry the procedures on the amendment. Second, we need to extend the procedures to the new date of the audit reports. Yes, we need to extend the procedures as well as per SA 560. We need to provide a new auditor's report on the amended financial statements. It should not be earlier than the audit of date of approval of the amended financial statements. This is also correct. Lastly, we need to modify the opinion as per SA 705 and provide the auditor's report. No, sir, modification is not mandatory in as per SA 560. Okay, yes, sir. So this is wrong. Okay, yes, sir. Next. When we are responding to the management offer, guide CAM. CAM is a visiting faculty. We need to guide CAM whether they can take the assignment of statutory audit of HT Institute of Professional Studies for financial year 23-24 or not. So basically, we are the visiting faculty of this HT Institute, and we were given the offer for being the auditor. Can I be the auditor of the same entity, same college where I am the visiting faculty, which means where I am part-time lecturer? No, sir, I cannot do that because it violates clause 4 of part 1 of second schedule. Okay, yes, sir. Chaliye. Let's discuss this was your case scenario number 40. We have already done case scenario number 40, which means we have done 2/3 of our case scenario booklet. Now we are starting with our case scenario number 41. Let's do case scenario number 41. What it says, sir, first of all, the balance of GHGF bank with the Swiss based bank should be converted into Indian currency. So the foreign currency should be converted into Indian currency at what exchange rate, sir? The exchange rate that is prevailing on the balance sheet date. Okay, yes, sir. Next, what should be the proper audit procedure in respect of interest on deposit accrued but not due amounting to 87,75,000 rupees? So this is an interest accrued on deposits, but it is not due at. So it should not be included in deposits amount. Secondly, the amount should not be included in the amount of deposits. This is correct. The amount should be shown under the head other liabilities and provision. This is correct. So both B and C are correct. Next, there is an amount of interest rate swap amounting to 81,26,500. This is shown under current contingent liability. Just remember that interest rate swap is shown under contingent liability. Okay, yes, sir. Next, which of the following is correct statement related to requirement laid down by RBI for Roshan and Associates while verifying compliance with SLR requirements? So while verifying compliance, what we check, sir? We check that we need to verify the compliance with SLR at 12 odd dates in different months of the financial year, not being Fridays. And this will be tested in one of your case scenarios that will be coming ahead. Okay, yes, sir. Let's do case scenario number 42. We have done case scenario number 41. What it says, sir? It says, as per requirement of SA 570, how we need to deal with the matter of unwillingness of management to provide the assessment related to going concern. If management is not providing us the assessment related to going concern, how we have to deal with this? First of all, auditor should report such matters in section on CAM. No, sir, we did not report it to CAM. Next, the auditor should properly document evidence relating to asking the management and its subsequent follow-up with the management, and accordingly should express the unmodified opinion. They said you need to make the documentation and then you can issue unmodified opinion. No, sir. We need to report such matter in emphasis of matter paragraph. No, sir. Then what we have to actually do? We need to express modified opinion in our audit report. Okay, yes, sir. Second, as per SA 501, what is the correct audit procedure that we have to follow for existence and condition of inventory where 12.5 crore 35 crore inventory is lying with third party? So there is an inventory lying with third party. How we can check the existence and condition? We need to rely on management explanation. No, sir. We need to verify the inventory lying with the company, not the third party. No, sir. We can inspect the third party as well. We should take written representation only from the management. No, sir. Then what we should actually do, sir? We should request confirmation from the third party regarding the conditions and quantities of the inventory that are held with them, or we can also perform other inspection or other procedures as we consider appropriate. Okay, yes, sir. Next is what, sir? So basically here we have to check what we need to report under cash loss. So in cash loss, you need to see we just take cash loss, we do not take operating cash loss. So here the cash loss is 2.95 crore. So we will report 2.95 crore under clause 17 of CARO 2020 regarding the cash losses. Okay, yes, sir. Now as per SF 510, which of the following audit procedures can be implemented to obtain sufficient and appropriate audit evidence regarding the opening balances, whether it has a material misstatement or not? So what are the procedures that we will perform as per SF 510? First of all, closing balances of preceding year have been correctly brought forward to current period. We need to perform this. Second, performing specific audit procedures to obtain evidence regarding opening balances. We can do this. Third, we need to determine whether the opening balances reflect the correct application of appropriate accounting policies. We have to also do this. So 1, 2, 3, we have to do all. Okay, yes, sir. Next is what, sir? This was your case scenario number 42. Now we are doing case scenario number 43. What it is saying, sir? Question number 3 we have to do from here. So here it is saying, considering the nature of business, which reporting of the CARO clauses would be applicable from below? So it is a NBFC. So considering NBFC, which CARO clauses will be applicable? First of all, we have to check whether the company has conducted any NBFC or HFC without any certificate of registration. Yes, sir, we have to check that. Secondly, in respect of loans and advances in nature of loans, whether schedule of repayment of principal and payment of interest had been stipulated, and whether the receipts or payments are regular. This is also applicable in NBFC. Next, whether the NBFC is required to register under section 44 IBA. This is also we have to report. But what we do not have to report is whether the company has provided any loans, guarantee or security provided to any other entity. Why, sir? Why we do not have to report it? Because in this particular sub clause A, we have discussed that this particular clause is not applicable on that particular company whose principal business is to give loan, and NBFC has the principal business of giving loan. That's why this particular sub clause is not applicable. So we have to report only on 1, 2, 3. Okay, 1, 2, 3. Okay, chalo. Yes. What we are saying, sir, what is the auditor's responsibility when the audit of AFG Limited for the previous year has not been conducted by the current auditor? So we have not conducted the audit of previous year of this particular company. What we have to do, sir? First of all, we need to report such matter in other matter paragraph in the main audit report. Yes, we need to tell about it that we did not issue audit report on previous year. Next, the auditor need to report such matter in emphasis of matter paragraph. No, sir, that is wrong. Next, the auditor shall be responsible for obtaining sufficient and appropriate audit evidence in opening balances. That is right. So 1 and 3 are right. I am sure now that this is repeated from the previous one of the case studies. Okay, yes sir. Chaliye. Next, in the given case, what is reporting requirement in relation to asset 250 on part of auditor with respect to violating guidelines by company with respect to acceptance of deposits? So there was an acceptance of deposit and the company has not fulfilled the guidelines for accepting the deposit. Now as per 250, what should I do as an auditor? So apart from reporting under emphasis of matter paragraph, I will report under emphasis of matter paragraph. I have to also report to RBI that they have not fulfilled the RBI guidelines. I will have to report to RBI as well. Okay, yes sir, this was your case scenario number 43. Let's do case scenario number 44. What does it say, sir? It say that the letter of comfort given by the banks to the whether the company has given the letter of comfort to the bank by the target company, whether we need to review as a part of FDD. Yes sir, we have discussed about this letter of comfort. This word is coming under hidden liabilities. So as per our FDD, we need to check about hidden liabilities or overvalued assets, and letter of comfort given to banks is a hidden liability and we need to review that. Okay, yes sir. Second is what, sir? Which among the following matter is not included in full scope financial due diligence? Cash flow included, accounting policies is also included, brief history of target and background of promoters is also included, but accounting information system is not included. Mind you, accounting policies including, accounting information system is not included. Okay, yes sir. Next, can Duwaaon company take the assistance of expert in pursuing the investigation? Can I take assistance of expert in investigation? Yes sir, I can take the assistance of expert in investigation like ingenious lawyers to whether so that I can do comprehensive and foolproof examination of documents and information. I can take assistance of experts. Okay, yes sir, this was your case scenario 44. Let's do case scenario number 45. What does it say, sir? It is saying that we need to identify the correct statement relating to reporting duties of auditor under clause 3.1 of CARO 2020. So under clause 3.1, what is our reporting responsibility? Just lead into details. Just we have to read between the lines. So it is saying that our duty is to report whether the company is maintaining proper records showing full particulars, including quantitative details and situation of PPE. Okay, yes sir, this is perfectly correct. This duty also applies to reporting on maintenance of record for right of use assets. Yes, ROU assets is also covered under PPE, and intangible assets are also covered under clause 1. Okay, yes sir, this is done. Next, we need to report whether PPE have been physically verified by management at reasonable intervals, and this duty on physical verification also extends to ROU assets. This is correct. Whenever PPE is mentioned, ROU assets will come with that. So this particular reporting is very correct. Now what was different from other in other options? In other option, lastly said that this physical verification does not extend to ROU asset. In the third one, they said that this physical verification does not extend to ROU asset. In the fourth one, they said that quantitative details or reporting quantitative details does not extend to ROU asset. This is very wrong. The correct one is this one. Okay, yes sir. Let's do question number 2. What does it say, sir? It says, so there are basically these are statutory dues and these are the forum where the statutory dues is pending. Okay, there is a dispute basically and the forum where the dispute is pending. Now as per clause 7b of CARO 2020, do I have to report this under clause 7b? Yes, I have to report this. Are all the statutory dues need to be reported? Yes, since all are disputed statutory dues and all are pending under a forum, therefore I will have to report all the 4 statutory dues. So all the 4 matters which are information provided in the case scenario need to be reported. Okay, yes sir. Let's do question number 3. What does it say, sir? It says in terms of question number 3 that during the course of audit, we informed by the management that there were 2 supervisory employees who have been dismissed from the service because they did a fraud of 47 lakh during the year 2023-24. The amount was subsequently recovered from them during the year itself. Now, if there is a fraud on the company or there is a fraud by the company which is noticed or reported during the year, we need to report under clause 11 of CARO 2020. This 47 lakh is not of a concern. This is only concern when we are seeing under Section 143.12 under fraud reporting, 1 crore should be the amount. Here is 47 lakh, but in CARO 2020 that is not of concern if there is a fraud on the company. So here it is saying that yes, it is a fraud on the company and we need to report the nature of fraud and amount involved, and the duty of report is irrespective of the amount involved. Okay, yes sir. Next it is saying as regards the cost records, what is the following statement is concerned. So basically as per clause 6, when we are reporting about the cost records, what is the thing that is correct? It is saying that we are not required to report on maintenance of cost accounts and cost records since cost auditor is already issued. So we do not care about cost auditor. We have to check that, means we have to check that. So this is wrong. The auditor is required to examine the cost audit report. No, we are not required to examine the cost audit report. This is wrong. The auditor has the duty to report on cost accounts or cost statements only. The clause does not require to auditor comment on maintenance of cost records. We are required to comment on the maintenance of cost records. So this is also wrong. What is the exact thing, sir? The auditor is required to report whether the prescribed cost accounts and cost records have been so made and maintained. end. Okay, yes sir, we have to comment about both, but we do not have to do cost audit. Okay, yes sir. What is question number 5? It says, so there is a, as per physical verification, this is the amount, and as per books of accounts, this is the amount, and this is the amount of, this is the percentage of change. So here you can see there is a change, this change is less than 10%, and this change is 10% or more. So here we will have to report about finished goods and stores and spare parts. Now here there is a doubt. So if the question is asking from the point of view of MCQ, then you have to always take denominator as books of accounts. So here, while calculating the percentage, I have taken the denominator as books of accounts. But when the question is asking, or in the terms of descriptive question, then as a first alternative, you have to give the percentage change as a in denominator taking physical verification, and as an alternative to, you can take the denominator as books of accounts. Okay, yes sir, while calculating with MCQ, you have to take the denominator as per books of accounts, but while calculating in descriptive question, you have to take the first denominator as a physical verification, then second as books of accounts. Okay, yes sir. So here what we are trying to say, here we are trying to say that we need to report the differences in value of finished goods and stores and spare parts. Since this difference is 10% based on, because in MCQ it is always written that it is based on value as per books of accounts. The difference is based on value as per books of accounts. Okay, we need to comment whether they have been properly dealt with in the books of accounts or not. Okay, yes sir, this was your case scenario number 45. Let's do case scenario number 46. What it says, sir, that okay, chalo, let me see what it is saying. That we have, that auditor says that the audit was properly planned, and he has further stated that it was not practically feasible for small firms to prepare a detailed audit plan. They have planned the audit correctly, but they have not documented the audit plan. What is the correct option? Audit was in fact planned as evidenced by the auditor submission. However, there is an exemption for small CA firms for not documenting the audit plan. Have we discussed about anything like small CA firms do not document audit plan, then it is correct? No sir, we haven't discussed about any of the exemptions, so this is wrong. Next, audit was in fact planned as evidenced by the auditor submission. They said audit was planned as per audit submissions, so we do not have to maintain documentation. This is also wrong. All the auditor has no record of audit plan. It does not affect compliance with SA 220. It says that if we are not documenting the audit plan, then it is also correct. Then it is wrong, sir. Since auditor has no record of audit plan, it indicates non-compliance with SA 220. Means you are not following you are not doing your work as per quality if you are not documenting audit plan. Okay, yes sir, this is your correct option. Next, sir. On your overall reading of the case study, which of the following statement appears to be true? So there are multiple lapses on quality control part. So what we will say, sir, the firm has an effective quality control system. Audit engagement has also been performed as per SA 220. No sir, we have already discussed that the SA 220 was not followed here. Next, SQC1 is not applicable in this case. Why? SQC1 is applicable in every case. Even when SA 220 is not applicable, SQC1 is applicable. So this is wrong. SQC1 is not applicable. This is wrong. So thus the firm does not have effective quality control system as described in SQC1, and audit engagement has also not been performed in accordance with SS 220. This will be your correct option because they have multiple lapses. Okay, yes. Next, the auditor has reasoned that risk of material misstatement has been assessed as low because based on the understanding of the company, and this is a professional judgment. Therefore, the auditor has not documented risk of material misstatement as well. Now we need to identify the most appropriate statement in this regard. Since the auditor has not recorded the how the risk of material misstatement was arrived, it goes on to show non-compliance with SS 220. You have to maintain a documentation of audit plan, of your risk assessment. If you are not doing that, means you are violating SA 220. You are not following SA 220. Okay, yes sir. Let's do question number 4. In question number 4, what we have to see, that we are the statutory auditor of a listed company, and secondly, it was pointed out to him that the EQCR was not carried out. He was answered that no contentious matters arose during the audit, therefore no need was to fail to carry out this exercise. So they are saying that there was no controversial matter in the audit, so we were not hiring any EQCR, and this is allowed. No beta, this is not allowed. Since you are auditing a listed entity, you should have an EQCR. EQCR is mandatory for audit of a listed entity. Okay, yes sir. So EQCR is mandatory in such type of engagement. It was not proper for auditor to bypass such review. He has violated the mandatory requirement of SA 220. Okay, yes sir. Last is question number 5. What does it say? It says that there was a error in data feeding entry by junior staff. So there was a junior staff and there was an error in data feeding entry. What was the error, sir? They basically applied AS in the Ind AS financial statements. In the Ind AS financial statements, they have referred AS, and this was the error by a junior staff. Now, which of the following statement is proper, sir? This was a serious quality control lapse. Such example are serious lapses on part of auditor, showing that they are not complying with SA 220, because if he was complying with SA 220, then he would have known of the errors earlier itself. Okay, yes sir, this was your case scenario number 46. Let's do case scenario number 47. What does it say, sir? With respect to auditor's conclusion relating to risk of material misstatement due to fraud related to revenue recognition. So here the auditor is saying, so generally we have a presumption that there is always a ROMM due to fraud related to revenue recognition. And if you want to say that this presumption is not applicable in this particular client, then you need to document the reasons for saying so. And here the auditor's conclusion was there is no risk of material misstatement due to fraud related to revenue recognition. So the auditor need to document the reasons for arriving at this conclusion. Okay, yes sir, this I have already taught you in your classes, that this is an MCQ that is asked by the MCI ICI. Okay, yes sir. Next, considering the auditor's finding related to inventory quantities, which is the not likely to be an appropriate response to outline risk of material misstatement due to fraud. So basically, we need to calculate, we need to check which is not an appropriate response, for risk of material misstatement due to fraud. First is observing the inventory count at all the locations at same date by employing necessary resources. So if you are employing the inventory count or doing the inventory count at all the locations on the same date, which means you will be able to find out the exact amount of inventory on that particular date. Secondly, we need to perform more rigorous examination of packed items during observing inventory count process, because packed items generally have some fraud in them, some adjustments in them. So we need to rigorously check those packed items. So this is also correct. Next, we need to observe the inventory count at the end of the reporting period to minimize risk of manipulation. We need to do the inventory count on 31st March so that there is no manipulation whatsoever. So these three are correct. But lastly, observing the inventory count at certain locations after prior intimation. If you are intimating them prior, if you are doing that only certain location, then they will be obviously able to hide their fraud that they might have done in your inventory. So this is not an appropriate procedure. Okay, yes sir. Next, which of the following statement most appropriately describes the auditor's responsibilities relating to compliance with statutory policy, controls and regulation, legislation and regulation? So basically, as per SA 250, if there is any law and regulation, there are two types of law and regulation. One is having direct effect and one is very fundamental to the operating effects. So this particular law and regulation is fundamental to the operating effects. So what we have to do we have to obtain sufficient and appropriate audit evidence regarding its compliance? No sir, we just have to do inquiry of company management personnel and review the correspondence and communication with the regulatory authorities to verify the compliance. Okay, yes sir. Next, with respect to the auditor observation relating to matter of child labor. So there was a child labor in the entity. Which is the most appropriate course of action for him? What should we do relating to the child labor? First of all, we should obtain further investigation information to evaluate the possible effect on financial statements. This can be done. Secondly, we must report the matter to concerned government department. No, we cannot directly report the matter. We should express modified opinion. No, we cannot directly express modified opinion. So what should we actually do, sir? We need to obtain further information to evaluate the possible effect on the financial statements. Correct. Besides, we should also evaluate implications of non-compliance for audit risk assessment. Whether our risk is more in this particular case, we need to assess this. Okay, yes sir, so this is your correct answer. Next is your MCQ number 5, which says which of the following statement is most appropriate regarding documentation of non-compliance with laws and regulations in as per SA 250. Instances of identified non-knocklar to be documented. No sir, suspected knocklar is to be documented. Instead of suspected knocklar is to be documented, no, identified is also to be documented. Instances of non-compliance with laws and regulations finally determined by court of law need to be documented. No sir. So what is exactly need to be documented? Instances of identified as well as suspected knocklar need to be documented. Okay, yes sir. This was your case scenario number 47. Let's do case scenario number 48. I am sure this is not repeated now. For last two times I have repeated and that was not repeated. I am sure this is also not repeated. Let's just see. So it is saying that while assessing the risk of material misstatement relating to revenue recognition policy, this is a significant risk. Now, which of the following is the most critical for statutory auditor to consider as per SA 315, even when the internal audit team has found no fraud risk based on the management experience? So basically, there are some factors through which we consider whether the risk is a significant risk or not. Now we have to identify which of this is that one factor which we consider while identifying significant risk. First of all, the internal team or competence and objectivity in evaluating the management experience. No, we do not consider that. Management's integrity and whether their experience translated into appropriate accounting estimates. No, it is not that. Next, whether the revenue recognition policy is appropriate for companies' business and consistent with AFRF. No, it is not that. And what is that particular factor that we consider, sir? As per SA 315, we have already discussed in SA 315. The complexity of transactions and the subjectivity in measuring the percentage of completion. This is a factor that we will consider when considering whether the risk is a significant risk or not. Okay, yes sir. Next, based on the above case scenario, we are assessing the company's financial performance. Which of the following course of action is most consistent with the requirements of SA 570? Means which is true. Which of the following statement is true? First of all, we need to conclude that no material uncertainty exists because the board has approved the plans to raise the additional capital. Board has approved the plan to raise the additional capital, and we will say there is no material uncertainty. No, here also there will be material uncertainty. Whether what if the plans to raise the additional capital are just plans? We are not able to raise the additional capital, then the material uncertainty will continue. Okay, yes sir. Second, we need to request a written representation from management at TCWG regarding their plans for future actions and feasibility of these plans. Okay, yes sir, this is correct. This is correct. This is not wrong, but this is not the most appropriate statement or most appropriate thing that we have to do. Third, we need to communicate to regulator that events or conditions have been identified that make a significant out an entity's ability to continue as going concern, even though management has plans to address them. Do we, as per SA 570, do we have to communicate anything to the regulator? No sir, this is wrong. We need to evaluate the management plans to raise additional capital, including their feasibility and the likelihood of their success in mitigating the going concern concerns. This is the combination of these two particular things that we need to evaluate their plans, their feasibility, and whether they will improve the situation or not. Okay, yes sir. Next is what, sir? So basically there is this company who have paid the arrears of undisputed statutory dues just a day before the date of audit report. After this, the auditor thinks that the only disputed dues need to be reported. Bhai, the undisputed dues which are pending, which are outstanding on the date of financial statements need to be reported. It doesn't matter whether they have been reported, they have been paid before the date of auditor's report or not. If they were outstanding on the date of financial statements, they need to be reported. So in this particular case, both undisputed and disputed statutory dues would have to be reported as per clause 7A and B of CARO 2020. Okay, yes sir, this was your case scenario number 48. Let's do case scenario number 49. What it is saying, sir, clause number 1, okay, question number 1, that there is a company which is engaged in selling of agricultural products which are outside the ambit of GST. Okay, the engagement team has found that substantial part of revenues, 75% part of the revenues generated through cash sales. However, there is no proper system and internal control to verify accuracy of revenue generated through cash sales. Means I am not able to obtain sufficient and appropriate audit evidence for 75% of the revenue. Now what we have to do, sir, we have to issue disclaimer of opinion. So what we will do, sir, we will give disclaimer of opinion, and in basis for disclaimer of opinion will also be provided. Besides, when we are writing that we have audited the financial statements of the entity, we will write we were engaged to audit the financial statements of the entity. Okay, yes sir, this is your first thing. The second thing is there is another client, Excel Limited, who has been dragged to court by another company for stealing its trade secrets using cyber theft. So this company has steal the trade secrets of this particular company and also filed a claim of 50 crore. Now, where we were reviewing the audit file of Excel Limited, we find that the legal opinion of the company's standard counsel is ambiguous. They are not saying correctly whether their court case will be in favor or not, and there are precedent case laws both in favor and against on such issue, and the financial statements are silent on litigation matter. How can you be silent, bro? There is a 50 crore legal case on you. How can you be silent? This is material, but obviously not pervasive because we do not know about the spreading in the financial statement. So what we will do, sir, we will issue modified opinion. So here it amounts to non-disclosure of material contingent liability by the company. So we will issue qualified opinion. Okay, yes sir. Next it is what, sir? Third question, it is said that we have noticed on review of audit file of a client that there was a net profit before tax of 2 crore on a turnover of 100 crore. There is an export receivable of 3 crore for which there is no chance of recovery, and because the said debtor has gone bankrupt, so there is no chance of recovery, and there is no hope for recovering from ECGC as well due to certain technical issue. But this particular 3 crore has not been written off by the client despite communicated to the client, which means we have a pending bad debt to be written off 3 crore and we just have a net profit before tax of 2 crore. Now does this 3 crore misstatement, as I would say, because it is not recorded in bad debts, will it be considered as material and pervasive? Yes, because if we recognize this bad debt of 3 crore, our net profit before tax of 2 crore will become a loss of 1 crore. Therefore it is material and pervasive, and therefore we will issue adverse opinion in this particular case. So what we will give, sir? Adverse opinion. Now next is what's up. So basically on reviewing the file of a client, we noticed that the we were not informed about a finished goods of 1 crore that were lying at a location on a rented February 2024, and this issue was flagged at the time of reconciling the inventories by the team, and hence we cannot attend any physical inventory counting for 1 crore items of the inventory. The alternative procedures cannot be performed because there were no adequate records pertaining to that location, and total inventories is 8 crore and PBT is 10 crore. So if PBT is 10 crore, which means it is not pervasive to the financial statements, but it is material to the financial statement since it is of 1 crore. So here what we will give, sir, we are not able to obtain sufficient and appropriate audit evidence regarding inventory which is material and but not pervasive, then we will issue qualified opinion. So here we will issue qualified opinion. Okay, yes sir, this was your case scenario number 49. Let's do case scenario number 50 here. Look at here, let's do case scenario number 50. What it is saying, sir, question 3 4 we have to do from above. Okay, so here the management has amended the financial statements which are finally approved on 25th July 2024. Now when we are providing new audit report, what will be the date of new audit report? It will should not be earlier than the date of approval of the amended financial statements, which means that date of new audit report will be either 25th July or after 25th July. So on or after 25th July. Okay, yes sir. Now CA Priya would have taken account a lot of procedures to get knowledge of the events occurring after the balance sheet date up to the date of audit report. Which of the following does not fall under such procedures as per SA 560? So when we are performing audit procedures as per SA 560, which is not the audit procedure as per in the given options. First is we need to obtain understanding of the management procedures set to identify the subsequent events. Obviously, we need to obtain the management procedures understanding. Secondly, we need to inquire the management regarding occurrence of subsequent event. Yes, we need to inquire. Third, we need to read the minutes of meetings of board after the date of balance sheet date during the period. Yes, after the date of balance sheet. And fourth, we need to get the interim financial statements prepared till the date of audit report mandatorily as a condition to issue the audit report. This is false. We need to read the latest subsequent interim financial statements of the entity only if they are available. This is not a mandatory requirement to get the interim financial information. Okay, yes sir, so this is wrong. Okay, yes sir, let's do for question what it says. So it says that our assistant told us that there was a major stock of the company which got destroyed because of the fire in their plant on 27 June 2024. Okay, we were ready to sign our report on 5th July, but before that we got to know about a fire that happened on 27 July and it has affected the company's operation badly. It has a material impact on the financial statements. Now we want the management to disclose the impact of this unfortunate incident since it is a non-adjusting event. So we need to disclose the impact of this unfortunate incident in the financial statements for the year 23-24, to which the management is disinclined. Management said we will not do it. After the management refusal, she issued her audit report on 15th July. So basically I told the management, please change the financial statements, please amend the financial statements. Management said no, and this has a material impact on my financial statements. So will I issue an unmodified opinion in this particular case? No sir, I will issue a modified opinion in this particular case. So here what it is said, sir, on the report that we issued on 15th July, we would have issued modified opinion. Okay, yes sir. Next is what, sir? So what has happened, sir? On 20 July 2024, the company informed that they have lost a lawsuit that was filed against the company by one of the creditor on 18/7/2024, and now the company has to pay a huge amount of 2 crore, and the events causing the lawsuit arose after 31st March 2024, which means this is also a non-adjusting event which has a 2 crore of impact. Okay, yes sir. Now CA Priya asked the management whether the financial statements are issued. No, management said the financial statements are not issued yet. Okay, yes sir. Now CA Priya wants to amend the financial statements to include the impact of lawsuit on the financial effects of the company. Obviously, CA Priya is saying that please include this impact on your financial statements. Now, management is very happy, but the management has decided that they will include the effect of both the financial state, both the events that have happened. Include this effect of fire as well, and include this effect of lawsuit going against as well. So basically, they are covering the impact of both the events, that is the fire and the losing in lawsuit. But they requested the CA Priya to issue a new audit report against the earlier one dated 15 July 2024. They have told the CA Priya, please issue a new audit report. Okay, CA Priya will agree that I will issue a new audit report. Now they are saying, now when we are issuing new audit report, what type of opinion we would have given? Now look at over here. When we issued the initial audit report on 15 July, we gave a modified opinion because it didn't give disclosure about the impact of the fire. But now they are giving disclosure about the impact of the fire as well, and they are giving the disclosure about the lawsuit as well. So here I will give unmodified opinion because they have given both the disclosure. Now the financial statements are not issued. So as per SA 560, blatantly leading that SA 560, if the financial statements are not issued, we do not need to give emphasis on matter paragraph in the new audit report. But if you see SA 706, SA 706 thinks that if as an auditor I need to draw attention to a matter that is fundamental to users understanding of the financial statements, I can do that. And these are the two big matters which have a material impact on the financial statements. So in this particular case as well, I can issue emphasis on matter paragraph even when not required by SA 560, but it is required by SA 706. So therefore I will issue unmodified opinion with emphasis of matter paragraph. Okay, yes sir. Lastly, it is saying that the fire event occurring on 27 June 2024 in the 24 in the company's plan requires following part on action of management. What should the management have done? Should they need to adjust the financial statement? No sir, because it is a non-adjusting event. They should have disclosure in the notes to accounts of the financial statements. Okay, yes sir, this was your case scenario number 50. Now we are starting with case scenario number 51. 50 case scenarios are already done in almost your 3 hours, and we will be covering the next 10 case scenarios very quickly, and we will be done with all the 30 case scenarios very fast, very first in the industry to do this 60 case scenarios just after ICL launched its booklet. I just followed this and I just started jotting down my all the points, and now we are just here to complete this case scenario booklet. If you have not liked it till now, this is your punishment that you also maybe this is your thing to do, that you will have to like this particular video so that you can motivate me to put more videos in English, because I was literally confused on whether I should put this English video in English or Hindi, because obviously I have my Hindi students as well, but I thought that if I make it in English, then it will be beneficial for all pan-India students. Hindi students will also be able to see it, and English students will also be able to see it. So if you support this decision, then do like this video. Okay, yes sir. Yes, let's do case scenario number 51. What it says, sir, so there is a notes to accounts of consolidated financial statements, and they are disclosing additional information. And what they are disclosing, sir, they are disclosing about percentages of consolidated net assets. They are disclosing percentage of consolidated profit and loss account and percentage of total comprehensive income. We don't have to disclose total comprehensive income. We have to disclose the percentage of OCI. There is no percentage of OCI over here. That's a discrepancy. Okay, yes sir. Next is what, sir, we have noticed that the financial statement of one foreign subsidiary that we have included in the CFS are drawn up to 31st December. While we prepare the financial statements till 31st March, one of the foreign subsidiaries financial statements is drawn up to 31st December according to legal requirements in US. And we find it very weird, and we are of the view that the CFS could present a distorted picture. So management has informed that it is not practicable to draw the financial statements of foreign subsidiary to 31st March 2024. Now what we should do, sir, because the financial statements of the subsidiary are drawn till 31st December only, so they are saying that we can accept the management versions of the financial statements. However, we need to verify whether the adjustments that were made because of the transactions that took place between the 1st January and 31st March are correct or not. We need to verify the effects of these events and transactions. Okay, yes sir. Next, which of the following statement is correct in respect of goodwill and other matter described in case scenario? So goodwill is your permanent consolidation adjustment, but intragroup indebtedness and harmonizing the different accounting policies are your current period consolidation adjustments. Okay, yes sir. Which of the following statement is most appropriate regarding consolidation of financial statements of the subsidiary acquired on 15th June? So we have acquired a subsidiary on 15th June. Now which of the following is true? First of all, it says that we need to verify whether the income and expenses of the subsidiary are included in CFS from the date it gains control on the subsidiary. So from 15th June, the income and expenses should be included in the CFS, and further, sir, income and expenses should be based on the amounts of assets and liabilities that is recognized in the financial CFS at the acquisition date. So we will calculate the fair value of assets and liabilities on the acquisition date, and based on that we will include them in our CFS. That is correct, and we have already discussed it in our FR. Okay, yes sir. Chaliye. Next, fifth question is what, sir? It says about the reporting requirement. What, sir? Regarding the reporting under CARO 2020 in respect of CFS, what we have to report under CARO 2020? We have to give the details of subsidiary together with the paragraph number of the report on CARO 2020 wherever there is any qualification or adverse remark. Okay, yes sir. Then we have to tell about the subsidiary and the paragraph number in CARO 2020. Okay, yes sir. Let's discuss case scenario 252. What it says, sir? 234. Okay, the concurrent auditor wants to be sure that fresh CASA accounts that are opened by the branch are KYC compliant. KYC is know your customer compliant. Which of the following best sums up the scope of KYC guidelines prescribed by RBI? So what is the scope? What are the things that are covered in the KYC guidelines prescribed by the RBI? Let's discuss. First of all, the basic purpose of guidelines is to weed out duplicate customers at the same branch. The KYC is prepared just to cancel or avoid any duplicate customers in the same branch. No sir, this is not the case. Secondly, this guideline contains detailed requirements for bank so that we can draw a 360-degree view about the client profile and for monitoring the transaction so that we can make prudent credit decisions. No sir, this KYC is not for making any credit decisions. Based on that, for credit decisions we'll obtain different information from the client. Third is, such guidelines have a basic objective of ensuring credit of direct benefit transfer in account of deserving account holders. So basically a government may have a scheme of direct benefit transfer of transferring the 10,000 rupees cash just before the elections. So for that particularly reasons we are obtaining KYC. That is also wrong. So what is the purpose of KYC, sir? Such guidelines contain detailed requirements in regarding the customer acceptance policy, customer identification procedures, monitoring of transactions and risk management. These are the things that are covered in our KYC guidelines. Okay, yes sir. Next is what, sir? So basically, as per CA Ronet, the following is a part of the duty of concurrent auditor regarding the dormant deposit account. What is a dormant deposit account? Which is not in operation for more than 2 years, then it is called dormant deposit account. Now, as per concurrent auditor, what do you have to perform in what procedures we have to perform for dormant deposit account? First of all, we need to follow up with the account holders to ensure that the status of accounts is active. Do we as the concurrent auditor have to follow up with the depositors? No sir, we do not have to do it. So this is not our procedure. Second, we need to examine the authorization for withdrawal. Yes, we need to examine. We need to verify that dormant accounts are revived with appropriate authority. Yes, we have to do that. So we have to perform 2 or 3 procedures. Okay, yes sir. So here what it is saying, sir, the thinking of Ronit is partially incorrect, as following up with the account also to holders to ensure that it remains active is not the duty of concurrent auditor. Okay, yes sir. Next is question number 3. It says that we have observed that the branch has sanctioned 7 fresh advances which are aggregating to 15 crore, and this 7 fresh advances are within the chief manager's power and as per the bank norms. Means everything is very crystal clear and everything is very perfect over here. But all these sanction advances were in the same industry, that is jute mills manufacturing, jute sacks, and we feel that the branch is not a proper, and sanction of 7 advances to same industry lacks diversity and lending decision of branch is not proper. So as a concurrent auditor, I feel that the branch is not lending properly. The lending decision of lending to one particular industry, the 15 crore amount, I think that it is not proper. But remember that it is in the power of chief manager and it is as per the bank norm. We cannot question chief manager's credit decision making. Okay, we can just report if there were, if suppose this particular sanction was not as per the bank norms, then we could have reported it. But since it is the bank norm and it is in the power of chief manager, then we do not have to do anything. We cannot question chief manager's credit decisions. Okay, yes sir, because we are the concurrent auditor, we are not the banker. So here lending has been made as per the powers and it does not fall on the concurrent auditor's domain to question the wisdom of lending decision conforming to bank norms. Okay, yes sir. Next it is what, sir? It is saying that during the month, a borrower branch has classified as a small enterprise under MSME sector shifted its credit facility from branch to a bank in private sector. So basically there was a MSME particularly, and they have shifted their credit facilities from our bank to another bank, and we have levied a foreclosure charges because obviously they have just foreclosed the loan. The loan, suppose the loan was of 10 years and they have foreclosed the loan in 1 year only. So we have levied the foreclosure charges on outstanding credit facilities, but it was not according to code of bank commitment to micro and small enterprises. Now if we report this particular thing that it was not as per the bank's policy, we should not have charged the foreclosure charges, then it will lead to revenue loss for the branch. If I report this particular thing, then it will lead to revenue loss for the branch. Then should I report this particular thing? Yes, you should report this particular thing. Since it was not as per the bank policy, you should report that the bank should not have charged the foreclosure charges, even when it will lead to revenue loss for the branch. Okay, yes sir, the matter should be reported even though it will lead to revenue loss for the branch. Okay, yes sir, chaliye. Next it is what, sir? Next it is saying which of the following statement is most appropriate regarding the reporting of matter relating to temporary over limits. So basically there is some temporary irregularity. There is temporary over limits in cash credit account. There is temporary overdraft in current account. What do we have to do, sir? We do not have to do anything. We do not have to do anything. The state instances we just have to report in monthly concurrent audit report, and we can also have a discussion with chief manager regarding this. But we do not have to classify those accounts as substandard accounts or NP accounts. We just have to discuss with chief manager and we just have to report in our monthly concurrent audit report. Okay, yes sir, this was your case scenario number 52. Let's do case scenario number 53. What does it say, sir? It is saying that the board of directors passed a resolution as mentioned in para A, which of the selling is most appropriate as regard reporting obligation of auditor as concerned. So basically this is a NBFC, and NBFC is a board of directors, and this board of directors passed a resolution that they will not be accepting the public deposits. Now, is there any reporting responsibility for us and the auditor? Yes, in the NBFC audit, we have discussed that if the board resolution is passed by an NBFC regarding non-acceptance of public deposit, this is a specific reporting requirement in our additional report to the board of directors of the company. Whenever we are giving the additional report, there were some points that we have to give. In that one, first point was this, that there should be a board resolution should be passed for non-acceptance of public deposits. Okay, yes sir. Second is the auditor has performed procedures relating to allowances as mentioned in para B. These allowances involve significant judgments and estimates. She want to state how it was addressed by her. How can she do that? So basically, first of all, these were significant judgment. If any matter is significant judgment, and we also want to say how we have addressed that particular matter, these two particular phrases are hinting towards key audit matters, that this is determined to be a key audit matter. So we can identify as a key audit matter in independent auditor's report. Okay, yes sir. Which of the following statement is most appropriate for reporting requirements relating to certificate of registration of the company obtained from RBI as described in above case? So relating to certificate of registration, it is our duty to report whether the company has obtained the certificate of registration under section 44 IBA as in our additional report to the board of directors, as well as in CARO 2020 we have to report this. Secondly, we are also required to report in additional audit report to the board of directors whether the company is entitled to hold the certificates as per financial assets and income pattern, that is 50-50 test. Okay, yes sir, we have to report to board of directors as well. Next, regarding the description of capital adequacy ratio, which of the following statement meets regulatory reporting requirements? So in terms of regulatory reporting requirements in capital adequacy ratio, it is said that we need to ascertain and verify whether the capital adequacy ratio is disclosed in NBS 7. Which form sir? NBS 7 currently arrived at, जो भी अपने the things we have disclosed is correctly arrived at, and with that ratio is in compliance with minimum CRAR prescribed by RBI. Okay, yes sir. Next, fifth question is regarding the cash embezzlement instances that we have identified during the year. Which of the following statement best fits into the reporting requirement of auditor? So if there is any cash embezzlement in the company, then what we have to do, sir? We have to report this matter under CARO 2020 regarding fraud. Cash embezzlement means there is a fraud on the company. So we will have to report in under CARO 2020 under relevant clause. Okay, yes sir, we don't have to see the amount because fraud on the company is covered in this particular situation, and we have to report as per clause 11 subclause A. Okay, yes sir, this was your case scenario 53. Now let's discuss your case scenario number 54. Look at over here, let's discuss case scenario number 44. What is 54? What it is saying, sir? It is saying that in one of the reports, CAG in respect of a state government owned industrial development corporation pointed out that there were non-adherence of one-time settlement guidelines. So basically there is a law and regulation which they are not following. Now this particular thing will be covered under which type of audit of PSC? If you are not complying with any law and regulation, then which particular audit will be covered, sir? Compliance audit. So this will be covered under compliance audit. Okay, yes sir. Next, it is saying that there is a CAG report for a particular year that contains the result of a Department of Revenue direct taxes of Union government. So if there is a central government department for which there is an audit report, then who does the review of central government department, sir? Public Accounts Committee has the responsibility for reviewing the audit report of central government department. Okay, yes sir. Now considering the nature of audit finding in case concerning delay in completion of work of thermal power plant. So there was a thermal power plant which we wanted to build, and there is a delay in completion of thermal power plant. Now this particular delay will be covered under which audit? Will it be covered under propriety audit? No. Will it be covered under financial audit? No. Will it be covered under compliance audit? No. So which audit will be covered under, sir? It will be covered under performance audit. Okay, yes sir. Next, which of the following statement is most appropriate regard to listed PSU? If it is a listed PSU, then who appoints the auditor, sir? Public sector undertaking, public sector company. Who appoints the auditor? C&AG. And the C&AG further can give directions to the firm of auditors as well. Okay, yes sir. Next, there are attestation engagement, there are direct reporting engagements. So in attestation engagement, the responsible party is responsible for evaluating the subject matter against the criteria, and as a practitioner I give the assurance on the evaluation of the subject matter against criteria. But in direct reporting engagement, I am responsible for evaluating the subject matter against the criteria. So here the performance audit and the compliance audit are direct reporting engagement. They are not assurance engagement, because in performance audit and compliance audit, I am the one who is responsible for evaluating the subject matter against the criteria. Okay, yes sir, this was your case scenario number 54. Let's do case scenario number 55. What it is saying, sir? Question number 2. Question number 1, yes. Which according to you is correct statement in context of opposite case scenario? Let's read it, what it is trying to say. Only the errors can be expected to be identified during the audit. No, sir, we can identify fraud as well. Only the statutory compliance can be expected out of statutory audit. No, sir, we can check financial statements as well. The management is of the view that all the frauds and error must be identified by the statutory auditor. This is wrong. We cannot identify all the fraud and errors. Then what we can do, sir? So basically, in the last year, the inventory at the Kochi branch of the company was very low, and therefore we didn't consider it in materiality, and basically it was immaterial, so we ignored it. But there was misstatement in Kochi branch, so it is saying that the auditor is contending that the last year the inventory levels in the Kochi were not in the sampling materiality level, like they were below the materiality, and therefore this issue was not identified. The previous issue in the Kochi was not identified because it was not material, and this is the part of your audit risk. And audit risk is what, sir? The risk that we approve this, we issue an inappropriate audit opinion when the financial statements are materially misstated. Here the financial statements could have been materially misstated, and I didn't got to know about it because I didn't check it in my sample because it was less than material. Okay, yes sir, but this time it could have been material. Okay, yes sir. What is second, sir? What it is trying to say? The auditor inquired on the periodicity of the physical verification. What is the periodicity of physical verification and sales process to Kochi warehouse? And management gave the following response. What it is saying, sir? It is saying that the physical verification takes place every 6 months. Very good. The warehouse keeper is responsible for physical verification and sending records back to the whole head office. The person who is responsible for keeping the warehouse records clean is the person who is responsible for reviewing the warehouse records. Whether I will say if I get to review my own copy, I will give my 100 on 100 marks in audit. Okay, so this is not the case. This is a self-review threat, so this is wrong. Second, because of low operations in past year, the warehouse keeper himself take care of invoicing and dispatching the goods. No, sir, this is also wrong. You should maintain segregation of duties. There is no segregation of duties. Monthly invoice details along with monthly stock register sent to the head office. This is good. Further, this year too, there is a substantial difference among inventory as per books, inventory as per stock register, inventory as per physical verification and descending order. This should be expected because of your control failures that are listed over here. Okay, yes sir. So what is the second question? Which component of audit risk are represented in the above case aforesaid scenario? So basically that is a control risk. Why control risk? Because your controls are not working properly. And there is a detection risk. Why detection risk? Because auditor may not be able to identify the risk of material misstatement. And here there is no inherent risk because we are just trading in garments, and the nature of the business is not such that there is a risk of material misstatement in financial statements. So there is not an inherent risk. There is just control risk and detection risk. Okay, yes sir, this is controlling and detection risk. Next, which component, which internal control seems to have been compromised as the root cause here? The root cause is segregation of duties. You are not following segregation of duties. Okay, yes sir. Which segregation of duty aspect seems to have been compromised here? Here three segregation of duty aspects seems to be compromised. First of all, execution, custodian and record keeping, because here warehouse keeper himself is responsible for execution of the transaction, for keeping the custody of the inventory, and for keeping the record of sales and everything as well. So here these three aspects of segregation of duties are missing, have been compromised. Okay, yes sir, this was your case scenario number 55. Last 5 case scenario left and we will be done with 60 case scenarios in a very detailed, effective and crisp manner. Okay, yes sir. So let's discuss case scenario number 56. What it says, sir? Question number 2 and question number 1. Question number 1, what it says: the bank has granted a term loan of 20 crore to Samarth Limited, which is an unlisted company, on 1st February 2024. The sanction letter, what does the sanction letter mention, sir? That you can use for repayment of unsecured loan to promoter 10 crore, okay, towards the development and construction expenses other than the land cost to be situated to new office in the Faridabad, Haryana, 10 crore rupees. So 10 crore, you can bifurcate. These are the purposes for which you have taken the loan. Now, how you have utilized it? First of all, you have land purchased for new office 4 crore. This is other than land cost. So 4 crore that you have purchased out of 20 crore. This is not utilized for the same purposes that it was taken for. Development and construction of expenses of new office. You were allowed 10 crore for development and construction, but you have incurred 11 crore. So 10 crore will be allowed, but 1 crore will not be allowed. Third, repayment of unsecured loans to promoter 3 crore. That was allowed repayment. You were allowed to do a repayment of 10 crore. You had did a 3 crore. That is also allowed. That comes under the purposes. And lastly, you have invested that fixed deposit 2 crore temporarily, even if temporarily, but it is a non-compliance. So 2 crore will also be counted. So in a way, you have 4, 1 plus 5, 5 plus 2, 7, 7 crore have been diverted, not being used for the purposes that they were supposed to be used. Okay, yes sir, this is question number 1. Second, what does it talk about, sir? The audit manager of the firm is reviewing the advances. Notice the following. The advances granted to Mr. X has been guaranteed by state government. However, state advance is overdue for since November 2023. Means this will be considered NPA for income recognition and asset classification purposes. Second, as on 20 April 2024, the ad hoc limit of account of Mr. Y has not been reviewed, even though 120 days from the ad hoc or date of ad hoc sanction were over. Do we consider 120 days or 180 days or 180 days? Beyond 180 days after the ad hoc sanction limit got over, we can consider it as NPA. Here only just 120 days are over, so we will not consider it as NPA. So Mr. X will be NPA, Mr. Y will not be NPA. Okay, yes sir. So here Mr. X will be an NPA. Okay, yes sir, not Mr. Y. Next, whether we are acting as a surveyor and loss assessor in violation of clause 11. No sir, surveyor and loss assessor is generally permitted, so it is not a violation. Next, whether AKN company is correct in not including a report on Caro in their statutory auditor report. So here AKN company is an insurance company, so Caro 2020 is applicable to insurance company. No, so yes, we are correct because Caro is not applicable to insurance company. Okay, yes sir, this was your case scenario number 56. Let's do case scenario number 57. What it is trying to say, sir, it is trying to say that there is a, we have determined goodwill of 2 crore. Now 2 crore is what's a permanent consolidation adjustment, so 2 crore is permanent consolidation. Then we have determined the amount of minority interest of 50 lakh rupees. 50 lakh is also permanent, so 250 lakh is your permanent consolidation adjustment. Second, there is intra-group transaction adjustment of 15 lakh. This is your temporary adjustment. And second is there is harmonization of accounting policy of 30 lakh. That is also temporary adjustment. So 45 lakh is your temporary adjustment. So 250 lakh is your current permanent adjustment, and 25 lakh is your temporary adjustment, current period consolidation adjustments. Okay, yes sir. Next is what, sir? Next it is what? It is talking about whose dates have been appropriately selected for SLR compliance. So while we are doing SLR compliance, we have selected the following dates. Now tell me which dates have been incorrectly selected. We have discussed already that we need to select 12 odd dates from different months in the financial year which are not Fridays. So here you don't have to remember anything, not the 12 odd days, whether we have to take odd or even, whether we have to take working days or weekends, whether we have to take different dates of each of the month. You just need to ensure that it should not be Friday, and one date from a month should be taken. Okay, yes sir. So here everything that is Friday, here one day from per month is taken, that is correct, but everything that is Friday is incorrect. So June month is incorrect, July is incorrect, and October is incorrect. Even Sunday is correct. Even Sunday is correct, but Friday is not correct. So 3 months are not correct over here. That is June, July, and October. Okay, yes sir. Next we have to calculate the SLR for demand and time liabilities. What will be the demand and time liabilities? So here if you see that the total liability is 200 crore. It includes margin held for funded facilities of 3 crore. That would be minus credit balance for branch of 4 crore. That will be included. So it is included. Adverse balance of Nostrum error account need to be included. It is included. Unadjusted deposit for agency business 6 crore. This is not included. So this will be minus. So 191 will be your demand and time liability. That is written over here. Okay. Yes, sir. Now if CA Das be guilty of professional misconduct after his wife has purchased a share of 100 for 15 lakh rupees, this 15 lakh is your market value. Face value is 100 rupees per share, which means the total face value is of 10,000 rupees. Now will we be disqualified, sir? No, we will not be disqualified, since the relative can hold a security of 1 lakh face value. So we will not be held professional guilty because we are not disqualified, as the relative owns shares of less than 1 lakh face value. Okay, yes sir, this was your case scenario number 56. 57, let's do case scenario number 58. What it is trying to say, sir? So it is saying that there is an audit report of Tom Limited for the last financial year 2023-24, which were audited by a predecessor auditor, and there was a qualification regarding non-provision for doubtful debts. In the current year also, company does not want to make provision for doubtful debts. So in the current year also, we will modify our opinion. Okay, yes sir. So what it is saying, sir, as per SA 710, we will need to modify the report for both current year and prior year financial statements, since the audit report of prior year previously issued contain a modified opinion, and the effect of modification is present in current year as well. Okay, yes sir. Next, Mrs. Day and Company assigned the following procedures to independent auditor to provide direct assistance. What did we assign, sir? First of all, that relate to higher assessed risk of material misstatement. No sir, we cannot assign anything that relate to higher assessed risk of material misstatement to internal auditor for direct assistance. This is completely wrong. Next, the work that relate to which the internal auditor have been involved and which will not be reported to management or TCWG. Yes, we can hire the internal auditor for direct assistance. That relate to decisions the statutory auditor makes in accordance with the essay. No sir, you cannot hire statutory internal auditor for this work. You can only hire internal auditor for this direct assistance too only. Okay, yes sir. Next, issues identified at Deva and company were regard to holding significant bank accounts. We had significant bank accounts and significant branch operations in tax haven jurisdiction. Now this is, and the significant related party transaction is a fraud risk factor. Now it comes under which heading? I already told you while discussing asset 240 that the fraud risk factors, ICI will take one of the lines and will ask under which category this falls, and this is particularly your opportunity to fraud. You have the opportunity to commit fraud when you are doing these transactions, and this will come under your FFR, that is fraudulent financial reporting. Okay, yes sir. What is fourth, sir? It is saying out of the following, which is the correct for complying the reporting requirement under CARO 2020 is regarding the lump sum deposit of estimated ESI collection and its adjustment again next term deposit, leaving the inadjusted significant difference between the ESI amount. So basically what has happened over here is we need to deposit the ESI amount, that is the employee state insurance amount, and that is a statutory dues. Okay, we deposit the statutory dues based on some data, some estimated data we deposit on monthly basis, and if there is a difference between the actual ESI that needs to be deposited and the deposit and the amount that is actually deposited, then we settle the difference in the next month's ESI deposit, and usually the difference is very insignificant, that is not very material. So can I say that the company is regular in depositing statutory dues? Yes, in this particular case I can say that the company is regular in depositing statutory dues because of materiality, because the difference is very insignificant, therefore I can say that. So here it is saying that the company is consistently following the method of payment in respect of ESI collection, and the difference between the total dues and lump sum deposit is not significant as per materiality concept. So we can say that it is not considered that dues have not been regularly deposited, hence need not be reported. So you can cut that, we can consider that the dues have been regularly deposited, so we should not report the same in the CARO 2020. Okay, yes sir, this was your case scenario 58. Let's do case scenario number 59. What does it say, sir? It is saying that during the FY 24-25 we have accepted the deposits of 900 crore with an asset size of 990 crore, and these were the activities that we have done. Now which layer we will be classified under? We are a deposit taking NBFC, and deposit taking NBFC irrespective of the asset side is classified under middle layer, so we will be classified under middle layer. Now we have to calculate the demand and time liabilities for NBFC. For calculating the total demand and time liability is 50,000, and it includes these following. So paid up capital will be less, reserves will be deducted, credit P&L and profit and loss account will be excluded, loans taken from RBI will be excluded, refinance taken from Exim Bank and NHB will be excluded, part amount of recoveries from borrowers will be excluded, net credit balance in branch adjustment account will not be excluded, interest accrued but not accounted for in books will not be excluded, margins held and kept in sundry deposits will be excluded. So 50,000 minus everything that we have discussed, it's 18,880. So here 80,880 will be your answer. Now keeping in view the information in para 3, in case of performance audit of PSU, which one of the following is not covered under audit design matrix? So audit design matrix, look at over here, audit design matrix covers evidence, audit questions, data collection and analysis method, but it does not cover audit program. Okay, yes sir. Now let's discuss the last case scenario number 60 of our CA final audit case scenario booklet that was just launched 1 or 2 days before, and we are the first one to do it. Here it is, the case scenario number 60. What it is saying, sir, after 5 months, Shubh and Lal LLP sent a mail to the previous auditor as a professional courtesy, stating that they were stating that the appointment was for the auditor. The previous auditor replied by stating received. So basically we were offered, maybe you can say, statutory audit in this particular case, and we just obtained a oral confirmation from the previous auditor. And after 5 months after accepting the audit, we obtain a written confirmation from the previous auditor. Is it correct, sir? No. We need to send a written confirmation to the previous auditor. Here we will be guilty of professional misconduct, bro. Here we will be guilty of professional misconduct. Because we should have communicated to the predecessor auditor via mail before accepting the appointment, not 5 months after accepting the appointment. Okay, yes. Here next is, here the subsidiary Neil Limited was already audited by other auditor. Whether Shubh and Labh Limited have to compulsorily rely on the financial statements of auditor of Neil Limited while auditing the consolidated financial statements. So it is saying whether we need to compulsorily rely on the component auditor's report. No, you don't have to compulsorily rely. No, principal auditor is not compelled to use the work of other auditor. SS 600, we need to assess ourselves whether the component auditor's work will be appropriate for placing the reliance on such work. If it is not, then we can perform procedures based on our judgment as well. Okay, yes sir. Next it is what, sir? There is a management of Arpan Films parent company that has reconciled the balance with its customers and vendors at interim period. So Shubham Lal company has decided to send independent requests to customers and vendors to confirm the balances. So we are going to send external confirmation. How much customers and vendors we are going to send the confirmation to? We are sending the customer confirmation to top 15 parties, and these top 15 parties constitute 5% of customers and 7% of vendors. Now, is the sampling strategy appropriate? We have just selected the top 15 parties of customers and vendors. Is the sampling strategy appropriate? No, it is not appropriate. Why it is not appropriate? Because, sir, we have already discussed that each item in the population should have a known chance of selection, and if you will be selecting only the top 15 items, then all the items in the population will not have an equal chance of selection. So inappropriate. Sample size appears to be insufficient. Method of selection does not allow each item in the population a chance of selection. Okay, yes, sir. Let's do question number 4. What it is saying, sir? So here, just think it. Here it is saying there is a parent company which has purchases music rights from Sangeet Limited for approximately 20 crores per annum. I know that for 20 crores per annum, I purchase music rights from my subsidiary. Now, Sangeet Limited is controlled by Mr. Prashant, who is related to Urban Films Limited. Okay. At the beginning of the current year, an advance of 50 crore was given to Sangeet Limited for purchase of music rights. I know that this year I will purchase a music right of 20 crore, but still I am giving the advance of 50 crore, and this advance is highly disproportionate to the expected purchase amount to be made, because the purchase amount is only 20 crore and I am giving the advance of 50 crore, and I am saying that any amount that is unadjusted would be repaid over a period of 5 years. So suppose 30 crore is unadjusted, you can repay me 30 crore over 5 years, not immediately. 30 crore over 5 years. Oh my god. And the credit period is not in line with the normal credit terms. Obviously, sir, credit period 5 years is not in line with the normal credit terms. Investigation revealed that the advance was given to provide financial support to Sangeet Limited as it was undergoing any financial distress. As at the end of the year, 30 crore remained unadjusted, obviously because 20 crore is the purchase amount. So no interest was charged on the unadjusted amount. So now here what it is doing, sir, here they are giving advances, and these advances are in nature of loans. They do not want to show loans in their books, so they are giving advances. But these advances are in nature of loans because of these all features. So here we will have to report under CARO 2020 because these cover loans and advances in nature of loans. Okay, yes, sir. So what it is trying to say, sir? Yes, the intent was to provide financial support, not purchase the goods. Therefore, the amount of advance and the settlement period are excessive and not as per the normal practice. Therefore, we should report as an advance in nature of loan. Okay, yes, sir. Last question, last MCQ. What it is trying to say? That there was a disagreement regarding an impairment loss that was unrecorded. Okay, from the context, CFS understatement of, okay, so basically there was a impairment expense that was not recorded in the subsidiary's financial statements, and to put it in context in terms of CFS, the impairment expense would have reduced net profit by 1%, total assets by 0.5%, net worth by 2%. Do you think it is material to consolidated financial statements? No, sir, it is not material to consolidated financial statements. Do I need to modify my opinion? No, I need to. Obviously, subsidiary auditor will modify its opinion, but not the CFS auditor, because from CFS it is not material. CFS point of view, it is not material. So it is saying that unmodified as the effect of opinion is not material to the group. So we will issue unmodified opinion only. Okay. Yes, sir. This was your 60 case scenarios of your CA final audit that has been just released by ICI for May 26 onwards examination. So obviously these will be relevant for all the people that are going to give exams after May 26. These were the detailed and crisp 100% English. If you have not liked it till now, you are doing very wrong with me. Please like it. And I have already told you about the 5-hour video that covers other case scenarios and other audit MCQs that is in Hindi. You can definitely watch it from the pinned comment and description section. Highlighted PDF will be provided in Telegram channel, and we are going to upload more videos and more valuable content for CA final audit on YouTube channel, Telegram channel. Please do subscribe to them as well. And lastly, to tell you about the resources, I have already told about all the resources that we have in terms of batches, books, test series, one-on-one mentorship program, after exam CNP, and felicitation fiesta. And if you are a Hindi student, we have all the resources for CA final AFM as well. Yes, sir. So please comment down CA with your name so that you make a manifestation that you are definitely going to clear in your CA final exams. This time we will score exemption in audit. Please keep me in your prayers. We will become chartered accountants. Thank you. Bye-bye. And do tell me how did you like this video or not. Okay, yes, do give me your feedbacks now. Please do give me your feedbacks. That will definitely motivate me to push myself harder. Okay, yes, sir. Bye-bye.